Very good morning to everyone. Welcome to the first meeting in 2025 of the IESBA. It's a pleasure to have you all here and thank you for making the way to New York, to those who are attending in person, and thank you to those attending virtually for the time and for making it, for some of you, at very unsocial hours. It's a real pleasure to restart in 2025 with this first public meeting. Before I say a few words at the start of this meeting and the start of a real news cycle, let me just welcome a few people here. Of course, very warm welcome to Janine van Diglen, PIOB Public Observer, Official Observer, and Yohei Ito from JFSA, who, as usual, is joining us. Thank you for your presence. But I'd like to extend a very special and warm welcome to our new board members, Nancy Miller. Nancy, can you please wave to the ones online? And Obishuku Nwazota, who unfortunately could not make it in person, but who is with us on the screen. Welcome, Nancy. Welcome, Obishuku. It's a real pleasure to have you, and thank you very much for your interest and for being available to join the IESBA, to offer your time and your knowledge to this board. I'd like also to welcome, even if he was already here in December, but just an observer, welcome Rui Perjorge, who is the new IESBA Strategic Communications Director, who is attending the board meeting for the first time. Welcome, Rui, as well. And if you want, you can wave too, so that everyone knows you. So you are all very welcome. Also, I'd like to welcome and thank, of course, Belinda Zonrab McConnell, the new technical advisor to China Wiesenjinge, and Ellen Goria, who is coming back. It's a very well-known face, but it's coming back to the board after a farewell in December. So it's a new life. It's a second life with us as a technical advisor to Nancy Miller. And of course, last but not least, welcome Chana as our new vice chair. I was saying my new vice chair, but it's really our new vice chair. And thanks Chana for his availability. Chana has been contributing, as you all know, immensely to the board, but on top of everything that he has already been doing for us, he now accepted to be the vice chair of the IESBA. It's a very important role, as you understand. China is and will be the one supporting me more directly, but it's also and above all a real opportunity to have someone with whom I can debate, someone who will for sure challenge me many times. I'm sure that China will not be the yes man, and it's not the purpose. It's really to have someone who is knowledgeable, who has a lot of experience, and who can help me redirect sometimes my attention and my focus, and who is always available all the time, in spite of the time difference between us. So thank you very much. Welcome, Chana. The expectations are high, and I'm sure that you're going to meet them without any question and any problem. So also, I'd like to welcome some former technical advisors of this board who missed us enough to make their way to New York and are here attending in person, namely Denise Canavan, Jens Engelhardt, Andrew Picnic, and Gina Maldonado Rodek, 4 former technical advisors who did not want to miss this meeting and joined us. Thank you very much. Thank you for the work that you provided to the board in the past, and thank you very much for making your way to New York and your time to be with us. And we have some familiar faces and people attending virtually, like Caroline Lee, former IESBA vice chair, who was used to sit here where Chana is now sitting, and Lisbeth Austmans, who is also a former IESBA board member, who is supposed to be attending virtually. I don't see their faces, but I have the information that they should be there. So thank you very much to all of you for your presence, for your time, for the generosity of your contributions. And before we move to the agenda of today, let me just say, share a few words and a few thoughts about the point in time where the IESBA is and how we are looking at the past, the present, and the future. Not much. It's not a philosophical introduction, but I think that this is really the good time, the right time for us to pause a little bit and think about ourselves and think about our direction, our mission, and etc. This is the first year of the meeting, but it also marks the start of a new cycle as we finalized the sustainability standards, which was what over the last 2 years was more intensively has used our energy and attention. But also a new cycle because of other things. We have a few people here around the table who are starting their new term, second term, including me, but not only. Chana, Christelle, Mark, Rich were all reappointed for new terms, and they are restarting their new terms. Also, we have Nancy, we have Obichaku. So it's really, I feel that this is a new cycle starting for the IESBA. The final months of 2024 were especially demanding for this board, with a very heavy workload, which was intensified by some external sources of pressure, so to speak, some of which were very significant, while I think not always proportionate, but we had to navigate this all. So the final stages of our sustainability project really posed some challenges to this board, and it required a lot of additional engagement, additional intelligence, additional ability to navigate the many topics and the many sources of sometimes unquietness that we had to deal with. But it also ensured that we remained true to the integrity of this project and to our public interest mandate. And this, I think that after all, this balance is necessary. We went through a lot of things. We did everything with passion, with purpose, with conviction. I think that nothing of that was touched, that it remains untouched. But I think that we also came out of this experience stronger and more knowledgeable about how to deal with everything that makes standard setting sometimes challenging, but also beautiful. The implementation of the standards are now approved and certified. When we met in December, this was not yet the case. We approved the standards in December, but there was still a journey ahead of us. The standards have now been certified, and our energy today now should be directed towards implementation, rather than being, sidetracked by unnecessary debates. It's the focus on what we have to do that we should now take and be focused on. We must really honor our commitment to supporting stakeholders in the critical adoption process. These implementation efforts, of course, need to be calibrated against our own resources, against some criteria and some assumptions with respect to these implementation efforts, also considering some political developments, etc. But it doesn't touch our standards, doesn't touch our conviction, doesn't touch our also the conviction that these implementation efforts are absolutely needed. We will hear today, this afternoon, from Amajit and the working group, the plans that they have, and it's going to be a very good opportunity to discuss all that. So I'm not going to say anything else about that, just that we will, the road is not, the journey is not over. We still have a second phase for sustainability to develop the correspondent to part 4B of the code. And we will need to have a strategic discussion at some point about what we are going to do, what is needed to do, and etc. That's not yet the time, but we should be prepared for that to come very soon. So the IESBA is really, as I was saying, at the start of a new cycle, and through these very many challenges that we had to navigate, I'm sure that we have emerged stronger as a board, with a reinforced conviction in the value and the relevance of our standards and of ethics. We also have gained some insights and some knowledge about how to manage or how to deal, how to engage with our stakeholders, increasing our listening ability and capacity, and the processing the information, ensuring that the profession remains at the center of our efforts, and all these things. It was really an interesting time for us as a board. So the last 2 years have also coincided, and that's not indifferent for us, with implementation of the monitoring group recommendations. And it requires all the time, and is requiring adjustments from both boards, from the IESBA and IESB, to a new institutional framework, while of course maintaining our unwavering commitment and focus on our independence as a board and on the public interest ultimately. So this is a point in time where we and when I say we, it's IESBA, but it's us all individually, the organization and the world. I would say we are facing some uncertainty coming from multiple sources. In our case, external, but also internal sources of some uncertainty. But we need, and I'm sure we remain confident in the IESBA's mission and its critical role in an evolving landscape. In these times of uncertainty, and I will not be shy in stating what I'm going to say, which I think, and I know it's the sentiment of this board, in times of uncertainty, in terms of deregulation, in times of transformation, in times of change, that like the ones we are going through now, ethics is even more relevant than in a quiet and times of certainty. It's what guides professional judgment, it's what guides professional decision making, and it's what guides behavior when the rules start being less detailed or even absent, when they are not there anymore. What is left is an ethical framework that guides professionals in making decisions. So the IESBA stands here at a critical juncture because our role, if anything, is even more important. Our product is even more relevant and necessary. We are aware of these responsibilities, all of us, and we need to be prepared to adapt as to changing market and economic needs, conditions, etc., while keeping on upholding our vision as an ethics board. So after this very intense last 2 years, we sometimes, or I'd say probably many times, missed the necessary space that we need to sometimes pause and make a deep reflection about the direction of the work, about our vision, about ourselves as a board. I think that we are now provided with this opportunity. Is not that we are not working and or that we are stopping or that we are going on holidays. On the contrary, the first 3 months of this, or 2.5 months of this year, show that we are very intensively working, but also that we are having or providing ourselves some opportunity for deeper reflections about how we want to go, how we want to work, how we want to engage with stakeholders, what do we want to make with our value proposition to make it even stronger and even more relevant. So this intense period was also created some fatigue, and we are aware of that for our stakeholders, and we recognize that as it's not only the last 2 years, it's probably the last, say, 5 years or so. We hear them saying, well, we are at a period where we need to implement all those standards that you issued over the last 5 years, and we hear, and that's exactly the time to pause a little bit, provide that space to our stakeholders as well, to very quietly and thoroughly look at the standards, sometimes realize that it's probably simpler than they perceive them when we don't have time to look at it carefully. And that's what we are doing. So for those who were not there, this board had a meeting, like a private meeting, board members and staff only, where we had these discussions. And what I'm saying here is I say it with the confidence that the whole board agrees with these perspectives. So the current context, of course, requires some prioritization, a very effective resource allocation, and a very global or holistic, if I may say so, approach to positioning ourselves to maximize the offer, our offer to the public interest, to maximize the public interest impact, and to offer shareholders also a measured period of stability. And that's the purpose. And so the agenda that we had, moving now to the agenda for this week, it's a 3 days only meeting. I think that since I joined the IESBA, it's the very first time that we have a 3 days meeting. It also shows that we are in a slightly less hectic phase where we don't have that many deliberations and approvals and etc., which does not mean that this meeting is not going to be intense. Looking at the agenda, I think it's a really strategic agenda. At least I expect it. I expect the discussions to be so, thinking about what can be said and discussed under each one of the topics. Our focus on adoption and implementation, the consultation on collective investment schemes that we need to approve, our commitment to proactive stakeholder engagement, particularly with respect to the farm culture and governance project, which is the burning topic these days that we are starting. This all demonstrates our dedication to a principles-based standard setting. The focus on adoption and implementation is something new to this board that we felt that it was necessary to take care of as of last year. We created this working group not knowing exactly how far it would go. And I think that a few months after, all of us have the full conviction that it was a very good decision, a very necessary decision, and a very helpful instrument and for us to advance the standards. So in conclusion to all this, and before I go into the agenda, I'd also like to state that as I myself start my second term as chair of the IESBA, I want to reaffirm. I don't think that I needed to, but I'd really like to reaffirm my deep commitment to the ethics and to the IESBA. To maintaining our integrity as a board, our independence, our resilience as well, so many times needed as much as the rest. And this all even when times are not at odds, and it happens to everyone. I want to reaffirm my commitment as chair of this board to the public interest mandate and to reinforce our value proposition to the profession and to the public interest ultimately, which is what moves us, what makes us be here. The road ahead, of course, presents some challenges, and we should not neglect them nor not consider these challenges. There will be some challenges, but there will be also some big opportunities, and I prefer to look at the opportunities rather than to the challenges. And with the vision that this board has, with our determination, with our resilience, again, and it's an important word to keep, that IESBA has already demonstrated, I think that, and also the unity of this board, which is an element of richness and of strength that I should not, I do not want to underestimate. So I'm sure that we will be up to those challenges and that we will make the best out of those opportunities, making the IESBA growingly recognized, increasingly recognized as being the voice of ethics, which is what we need to do. So once again, thank you very much. And now on the agenda, going to more concrete things. We have you have seen the agenda. We have a few topics on the agenda. This morning, we will discuss the proposal for a public consultation on CIVs. And I'll say a few words about it, not now, before I give the floor to Linda and the working group to present. This afternoon, the working group on adoption and implementation will provide us with an update. We will have a few other topics over the week. We will have the farm culture and governance, which is, as I said, the burning topic that it's now with us, and that we'll have to navigate very smartly, very carefully, but with the determination that made us made us decide that we needed not one but two projects on farm culture and governance, and we will also receive an update on the EIOC on private equity and our plans for private equity and the private equity staff alert, very much needed, and I'll go into that topic when the time comes as well. And also an update on the coordination between IESB and IESBA, which is not of less importance given all the moments over the last times where we felt and we realized that we needed to coordinate. Also, we'll have a presentation, a short presentation, and an update from the communications team about the strategic approach to the IESBA communications for the next time. So in a nutshell, I think that's what's in the agenda. And again, I think that this triggers or may trigger very strategic discussions around the table. Finally, on outreach, I'm not going to go into any details. The outreach over these first 2 months have been rich, not only my own outreach, but board members, staff, and etc. When the time comes, we'll say something about it, namely when speaking about other topics. But I take the opportunity to thank all those involved in these activities over these last 2 months for their availability to be involved in such initiatives. The planning committee met in February. It was basically a meeting with updates on the different work streams and the planning for the 2025 board meeting, as well as some updates on outreach initiatives. And just so as you know, the stakeholder advisory group council, chaired by Alan Johnson, will meet here in May. May, yes, on the same week on which the national standard setters will also meet. So first week of May, Stakeholder Advisory Council, NSS meetings here in New York. And something that I'd like with a lot of pleasure to announce is that the September board meeting will take place in Lisbon. It's confirmed. So there are a few arrangements that we need to go through and set up, but it's confirmed that the meeting will take place in Lisbon, so you can make the arrangements in accordance. And it's important that it's even more important because there may be some developments here, but I wanted to inform you since the start. And with this, I think I'm gonna hand over to Ken, who has very important news for you. Now you do, namely on promotions, which is an upgrade to the staff. So Ken, please.
Thank you very much, Chair. Yes, indeed, on the matter of promotions, I'm pleased to just inform the board that there have been 2 promotions this year on the staff, with effect from 1st of January this year. The first one is Cam, sitting next to me. She's moving from principal to director. And the second promotion is Jan, who's moving from senior manager to principal. So congratulations to both of them. So that's really just in relation to the staff, Chair, that I had to announce.
No other administrative matter?
Just on the administrative, yes. So first one is the minutes have been circulated to the board. So if you have any comments, send them across to Astu, who will compile them. If you could do that by midday tomorrow, the board will be asked to approve the minutes on the Wednesday. And secondly, just in terms of board proceedings, the microphones, I would encourage you all to bring the mics closer to you as if you would like to take the floor, because we do have observers at the back and sometimes they're not able to hear, especially if you're kind of quite a distance from your microphones. So if you could do that, that'd be great. Thank you.
Thank you very much, Ken. Just my last few words. Thank you to the staff and to all those who made this meeting possible. Of course, at the end of the meeting, we will have the opportunity to thank Bera, but I think it's always important to recognize the work of all those who prepared everything for this meeting, the documents, the papers. Now that we are moving to a staff-driven model, the staff is even more involved and responsible. It's really stepping up to a different level level of responsibility. Thank you to all of you, but also to ask you, Diana, and all those who made this, all the arrangements to make this possible. My gratitude for that. And before I close these initial remarks, I'd like to see if Chana, by surprise, wants to say 2 words about his new role. So please.
Thanks, Chair. No, thank you for the opportunity. So to the Chair as well as for the PIOB also for supporting it. So I look forward to working in this new role and contributing to the projects, including firm culture and governance. Thank you.
Thank you very much, Vice Chair. And last word she's not here, but to recall and thank again to Laurie for her contribution over the last many years, but 2 years as Vice Chair. She's still with us. And with this, I think that we can move to the agenda a little bit ahead of time, which I'm happy for. So the first topic in the agenda is the presentation and with a view to approval of a consultation document on CIVs. And just to set the scene, I will recall that we approved or we decided to have this consultation paper, this public consultation document last September. And that it followed some presentations and some work that the working group did over the last year. So the origins of this project was on the IESBA plans, strategy and work plan. I think that it already on the former strategy and work plan, if I'm not wrong, I was not here, but it was something that when I joined in January 2022, there was a conversation already around this topic. It was nothing new. And the origin of this was that when the IESBA was working on the PI definition and on the PI project, there were some discussions around if these CIVs and pension funds should be or should be not included in this definition. At the end, with all the fact-finding research and this strategic analysis that was made by the IESBA and the PIOB agreed, there was an agreement to leave them out of the mandatory, if I can say, definition. Of course, jurisdictions could make their decisions, and they make their decisions with respect to include or not include all the CIVs, all the pension funds, just a part of them, depending on their impact, on their relevance, on their public interest nature. This is a decision left to national jurisdictions, which they actually are making. Some of them do it, some of them don't do it. But by the time there was a commitment from the IESBA, namely towards the PIOB, to do some work to confirm or assess if the existing provisions in the Code of Ethics related to independence of the auditor were fit for purpose for auditing of CIVs and pension funds. And this is because their relationship with third parties, given their different structure, because they don't have a corporate structure, because they don't have the same kind of third parties relating with them, might or might not, that's what we are exploring, not be covered enough sufficiently by the existing provisions directed to ensure the independence of the auditor in this relationship with third parties. So this was an old commitment from the IESBA, public commitment. It was included in our strategy and work plan. But besides that, let's not take it as just a formal commitment that we made. It's really important that the IESBA assesses if the code is fit for purpose, is appropriate, includes everything that is needed to ensure the independence of the auditor with respect to the relationship of the investment fund or the pension fund with third parties. This is needed, and the fact that we haven't heard about many problems, and I'm just repeating what I heard here around the table before, doesn't mean that one day there won't be a problem. So, and it's better to make this assessment before than after the problem exists, if ever. So this is the purpose of this work. The fact that there are different perspectives and that this is a complex technical topic drove us to this decision to make a public consultation, which is not something that we always do, so that we will be completely sure about the feedback, about all the information that we need to have when we decide what to do with this project. So it's like an interim phase between starting research and fact-finding and launching a real project to develop standards, if that's the case. So there is some information to be gathered still, and some reflection and discussion until we decide what to do and what exactly will be the scope of this project, and etc. So this is the purpose. I wanted to make it very clear, and it's not that you don't know where this comes from, but these last months was so intense around some topics named sustainability that, and then from culture and governance, there is a risk that a few things have been left a little bit aside and that we are not all absolutely clear about the background of this project and this proposal. So with that decision in last September, the working group, the first staff-driven model group, advanced the work and the research and etc. to draft this public consultation, which aims at collecting feedback, collecting information that will be precious for us to advance the project. And with this, I'm not going to say more and hand over to Linda, who is going to present their proposal. Thank you very much to the working group.
Thank you very much, Chair. I think the word that you chose, this is an exploration, is really key here, because we don't want anyone to jump to any conclusions that we have a proposal within the consultation paper or that we are moving forward with a project. We are exploring. That's where we are right now. And so today, what we encourage you to do is view this consultation paper through that lens so that we can develop or finalize a consultation paper that has really good, thoughtful, objective, probing questions that will allow us to find answers to questions that the project team has come up with. So, it works good. All right, first of all, the meeting outline. As Gabriella mentioned, we haven't spoken about this topic since September. So I think it's necessary to do a little introduction, revisit a few key points. So that's what we're going to do in the first two sections of the presentation. We've received some advanced comments and we appreciate those. Some are editorial. We can take those on board. Some others may kind of emerge in discussion form throughout this meeting, but we do appreciate those advanced comments and we have read them. Next on the meeting outline, we have three main sections of this presentation today. After each application of the code section and the research findings section, we will review and discuss the consultation questions that we've proposed for each topic. And these are, I think, meaty questions that really require thoughtful feedback. Because like I said, in order to get the best information back, we're going to have to put the best questions out there. So we want to make sure we have time for discussing these questions, evaluating these questions, and we look forward to your good feedback on them to help us get to a point where we can release this consultation paper, hopefully by the end of March or 1st of April. On the meeting outline, the way forward, I think, is kind of self-explanatory. So. All right, before we go further, I just want to remind everybody what we're taking up here. As Gabriella pointed out, this was a commitment to the PIOB, a commitment to the public interest, that we look at the independence provisions with respect to CIVs and pension funds, especially in the area of related entities, which are not uncommon in these types of investment schemes. That's kind of how we got here, and that's an important consideration. Over the past year or so, probably a little bit more than a year, the project team has done a large amount of research. We've done desktop research. We have reached out to different jurisdictions. We've collected questionnaires. We've talked to regulators. We've talked to national standard setters. We've talked to members of the profession. We've talked to a lot of people. And just like CIVs, we've learned there is a lot of diversity and complexity out there, just with how CIVs and pension funds are treated in different jurisdictions. So what do you do when you have all of that diversity and all of that information? Well, we're not at a stage where we can draw a conclusion. So you know what? If you can't conclude, you need more information. And that's why we're here with the consultation paper. So we believe this is the best way to move forward. And the board agreed to this in September. All right, we note there are a lot of differences between CIVs and pension funds. And that's something that, hold on one second. Yep, I'm exactly where I want to be. We note there's a lot of differences between pension funds and CIVs. And I want to just address that before we go into anything else. There are a lot of differences, but there are similarities. Both use external third parties for substantive parts of their financial reporting. And that's really what we're looking at. We're looking at these external third parties. So with pension funds, for example, they make use of actuaries. Sometimes those actuaries are going to be external third parties. And the information that actuaries contribute to the financial statements is highly relevant. Also, both allow investments for the public. For example, Hong Kong, they have the mandatory provident fund, which is for all individuals, all working individuals in Hong Kong. So those are going to be, even though it's a pension fund, that's the access is going to be open to everybody that works in Hong Kong. So those are some similarities with the collective investment vehicles. Now, at some point, we may decide that it makes sense to separate the two projects that we have, CIV and pension funds. But for now, we believe it's best to keep these together in one consultation paper. Also, we do not intend to include sophisticated schemes like private equity funds, hedge funds, REITs, anything like that. We're really focusing on these common collective investment vehicles and pension funds that are really open up to the public. So again, bearing in mind, the consultation paper does not include any proposals. It's an information gathering tool. So we want to spend sufficient time discussing the content and the wording of these questions going up. Now, I want you to look at this slide and just give some thought to it. Public interest. What's the public interest? It's what's best for everybody, right? So this slide really speaks to the volume of money that flows through CIVs and pension funds. It also highlights that IESBA found the topic of CIVs important enough to do a very comprehensive study back in 2004. Granted, that's 20 years ago and nothing new has been produced with respect to this, but it's a very comprehensive paper and it shares an important message, which is collective investment vehicles are very diverse, very complex, and treated differently in different jurisdictions. And that seems to be a common theme throughout all the jurisdictions we've talked to. Back to public interest. I don't want you to raise your hand, but how many of you have money in either a CIV or a pension fund? Again, no need to raise your hand, but I'm going to guess most of you in this room have money in a CIV or a pension fund. How would you feel if you found out tomorrow that all that money was gone as a result of something that could have been prevented? As a result of something that could have been prevented. You'd probably be a little disappointed. So that's where we are right now. Again, we don't have a proposal. We're not suggesting a project for standard setting. We're just trying to determine if there is a real gap there, and if there is, how do we deal with it? So that's something I want you to keep kind of at the front of your mind. All right. This slide demonstrates my keen skill at developing PowerPoint slides. I do my best. But what I wanted to do is I wanted to give you a graphic that would really stick with you so that you could see, for those of us that are visual learners, you can see kind of how the information flows and hopefully you can see where we're going. First of all, what's a collective investment vehicle? These are investments that are pulled together to put into a CIV for the benefit of the investors. Like I said, not private equity funds, not hedge funds, nothing sophisticated like that, but the funds that we would be used to. I heard an analogy, and I think it's an excellent one. CIVs are the frozen dinners of the investment world. They're the frozen dinners of the investment world. What's a frozen dinner? You get your meat and your 2 vegetables and a dessert, right? You get a combination. You've got diversity there. That's what CIVs are. They allow investors to diversify, to take their money and then have it go into different investments in securities or whatnot. And that's a good thing. But also, like frozen dinners, they differ in different jurisdictions. So I can tell you the frozen dinner you find in Hong Kong is going to be different from the frozen dinner you find in the US. Same with what we're finding with respect to regulation, government structures, management, everything about CIVs and pension funds. And that's why this makes this so incredibly challenging. But that doesn't mean that we should just walk away and say we don't do anything. We need to dig. We're trying to funnel down to really, really hone in on the issue, if there is one. So, like I said, you've got your investors and you've got their money. That's going into the CIVs. All right. So you've got this CIV that is collective investment vehicle. That is oftentimes just kind of a structure, all right, that basically holds the money. There could be people above it, the board or sponsors, whatever. But anyway, for now, let's just say it's a structure that doesn't necessarily have any employees. And therein lies the problem, because if it were a normal organization, there would be employees within that corporate bubble. And it would be easy to identify who the auditor has to be independent of. But in this case, it's a little different. So you have this structure and you have some activities that are performed by an external third party. That's the gentleman down at the bottom. So you have activities that are performed by this external third party. For example, in this case, I'm using the example of a fund manager, and he's the one that chooses and invests in securities on behalf of the CIV. So money goes into the CIV, or fund manager invests that money, accounts for that money, and then that information flows into the CIV. I think I want to share right now something that's really important before we go further. We've had some questions about the wording of how we try to explain exactly what we're looking at, the unrelated third parties or the people that are infusing information into the financial records. And we haven't landed on maybe the proper information or the proper wording. But what I want to do is I want to read to you something that's in the code that really speaks to what this fund manager does and what we're looking at, what we're trying to focus on. And it's section 400.31A2. I don't know if anybody has their code, but I'll read it to you. Section 400.31A2. Now, yes, it's in the section about period during which independence is required, but I want you to focus on the wording. This is what we're looking at for these people that are not considered related entities. We are looking at third parties. Okay, a factor to be considered in such circumstances is whether the results of the service provided might form part of or affect the accounting records, the internal controls over financial reporting, or the financial statements on which the firm will express an opinion. So again, just whether the results of the service of, say, the fund manager provided might form part of or affect the accounting records, the internal controls over financial reporting, or the financial statements on which the firm will express an opinion. So I think it would be hard to say that the fund manager doesn't contribute to the financials in this way. So this is kind of, for me, a the guiding principle that I think about when I'm evaluating these external third parties. Anyway, so you have your fund manager. Then you've got your auditor, of course. And there are just a couple of questions that I've put up there to kind of help you think about how possibly independence may be threatened by certain situations. So for example, for the spouse, and let me just tell you, I'll use a flow chart in the next slide to kind of work through some of these issues to show you why these don't fall within the related entity definition. But just for now, I want to kind of look at this from a practical perspective. So for the auditor, for example, can the auditor's spouse work for the fund manager? Well, think about this. Let's just say that the spouse is the gentleman at the bottom. He is the fund manager. So the auditor audits the CIV. The fund manager chooses and invests in the securities that are on behalf of the CIV. So that's relevant information that's going into the financial statements. Doesn't it seem that possibly it would be an independence threat if the spouse of the auditor worked for the fund manager? Probably, but that's not up for debate right now. Also, let's say that the fund manager down in the corner hired a consultant from the auditor's firm, ABC Accountants. Let's say he hired a consultant from ABC to develop the company's transaction processing system. So that's, an IT issue. It's something that processes all of the investments that this fund manager is responsible for. So that potentially could have an impact on the CIV's financial statements. So these are, and wouldn't you think there would need to be independence between ABC Accountants and that fund manager? These are things that we were looking at. We've got some questions down in the bottom corner, just kind of to ponder. I don't think I want to say anything else about that one. Right. So let's go on to the flow chart. All right. Like I said, we're going to I want to kind of work through the example that I gave previously using this flow chart. So if I began at the beginning, the first rectangle up in the left-hand side, we've scoped in collective investment vehicles and pension funds as the basis for this research. So the first question, is the entity a collective investment vehicle or pension fund? An investment scheme, as we refer to them, that allows members of the public to invest in pooled funds? That's the first question. So back to our example, yes, we know it was a CIV that allowed public funds. If they're not public funds, and CIVs, pension funds, then it's not the focus of our consultation paper. We've had some people comment on the fact that other third parties, different industries use other third parties, possibly external third parties. But that's not the focus of this consultation paper. There's a very specific focus that came from the agreement between PIOB, IESBA, it's CIVs and pension funds. So anything beyond that is not the focus of the consultation paper. So let's go down. Does the investment scheme engage a third party that is responsible for decision-making and operation of the scheme or materially affects the performance? So again, we've tried to get the wording right. There is some question about whether or not we have. That's why I read the text in code section 400.31. A2, because I think that really clearly speaks to what we're looking at, what the third party does that would cause it to rise to our level of attention. If not, then fine, comply with the code to assess auditor independence. All right. However, if it's yes, then you say, is the third party related? Is the third party a related entity per the code? Because the code has a very clear definition of related entities and kind of the characteristics that would be present for an entity to be considered a related entity. And typically those are going to deal with control and significant influence. So those are very relevant in determining whether a third party is a related entity. If they are, if the PA or the professional accountant looks at the code, looks at the related entity definition, looks at R 400.27 and concludes that the third party is a related entity, fine, then they'll comply with Part 4A of the code. If not, then they go down to the nice little green box. And the green box focuses on the risk that independence is not adequately evaluated as the third party is not part of the audit client. So it's important to keep in mind that just the basics, auditors are required to be independent from their audit client. All right, they're required to be independent from their audit client. Audit client includes related entities. Fine. Code clearly sets out who would be related entities. All right, well, like I said, control and significant influence are relevant to the related entity designation category, whatever. But what if there is not control or significant influence? Let's go back to that fund manager in the graphic. I can tell you there is no control, no significant influence. He has been deemed an unrelated third party. He's not related. He's not a related party. So then, if he's not a related party, then professional accountants wouldn't necessarily go to 4A to evaluate auditor independence. Potentially, they could go to the conceptual framework, and that's what we've heard from some stakeholders. Is the conceptual framework is sufficient, and perhaps they're correct. But that's what we want evidence to support. That's why we need to do this consultation paper, to ask the questions, to help us gather evidence, to really identify, is there a real threat? Is there a real gap? Or is it just something that is theoretical? When we look at it on paper, we can say, yeah, there's a gap. However, it is being dealt with this way, and there is minimal risk to the public. And if that's the case, that's perfectly fine. So with that, I'm going to end this session. I'll ask if anybody has questions before turning it over to John to go into the next session. Anything that needs to be clarified, any points? I'm happy to try to help. Or shall we go on to the next? Christelle?
During your fact-finding period, I see that on the previous chart here, you tried to identify the unrelated parties that might threaten the independence.
Yeah.
Did you compare this to the same kind of questioning for general structure, usual structure of audited client?
So like, are you talking about like the traditional corporate structure? Do we compare it to? Well,
Because you are saying I'm going to by sort of rebounding on potential threats, etc. Related parties is something very well defined. By the way, on CIVs, generally, when it's not the usual definition, there is a regulation that says who is related to who. That's generally present. But so what if we would conclude that there might be a gap and that we would fill it by saying something on the purpose for CIVs and why we should have good reason for not extending this or not having this extended by thinking on the general schemes, investment schemes or firm structures, etc.
Yeah. Let me try to answer what I think I heard. So you talked about traditional corporate structures and whether we've compared the external third parties with what happens in traditional corporate structure. So I think I think the way I would look at this is say, there are CIVs that do have, within their, entity, within their group, possibly fund managers or investment advisors, and those potentially could be subsidiaries. So if you were to apply the code, you would consider those potentially, related entities. And then they would be scoped in as the audit client, and therefore the independence provisions would apply to them. So you wouldn't have that when you're looking at these external third parties. And so that's why we're looking at those to try to dig in a little deeper. However, the treatment should be the same. And I think that's what we're kind of trying to say is, if you look at those that are within the group, you would have to be independent. The auditor would have to be independent of those subsidiaries that are related entities that are doing the exact same function. So if they have to be independent of those that are doing the exact same function and are considered related entities, why wouldn't they have to be independent of these external third parties that are doing the same function? So I don't know if that addresses it.
I was looking at it from the other side, meaning if there is a relation, there is a usual way to treat it, be it CIVs or corporates. Yes, if it's related, it's related.
Right.
So now we are in the world of looking for the potential impact on independence of unrelated activity, unrelated parties having some activities. But there are a lot of unrelated parties to corporates that have an impact on the corporate's activities, accounts, whatever. And so I would recommend that whatever we conclude on the CIV side, we be careful on saying it is consistent. The conclusion is consistent with the conclusion you would have on corporates. That was my observation.
Thank you. If I could just add one comment, and then we can move on. I understand your point. Yeah. I think this goes back to what I said kind of earlier on, which is we have a very specific scope. And we don't want to go beyond that scope. And I think when we start looking at other third parties in other industries, that goes beyond our scope. So I think we want to try to stay as refined as possible. But I think we take.
But we are principle based.
Yes. Yeah. Exactly. Absolutely. And that is the key point here. Is we are principles based. So with that in mind, yes, the principle should apply throughout. Yes. Absolutely. Thank you. I'm not sure who's next. Ken, do you know? Everybody's like lined up right here.
Sorry, Linda, Mark, please.
Thank you. I suppose sort of listening to the presentation, the way sort of my mind is on this is I sort of start with, if you apply the conceptual framework, is there a gap? And I worry that what we've tried to do is define whether or not there's a gap and then explain there's a conceptual framework as well. And I do think that, and this may come as part of the later discussion, is actually with the questions that we want to go out and get evidence from our stakeholders on, the starting position to my mind is the conceptual framework sufficient to address any threat that exists, and is there anything that's needed to deal with that residual threat from a public interest perspective? And I think that maybe if you do that, it might address Christelle's point, because I think we're perhaps trying a starting position which sort of sits outside of naturally where we look at from a code perspective. So I wonder whether that might help in terms of, you know, brigading the evidence from stakeholders as to whether or not we do have something to address here, or whether you can address it through what the conceptual framework already has.
Thank you, Mark. Yeah, that's a very important point. We realize the conceptual framework is quite relevant to the consideration of independence with respect to CIVs and pension funds. But I go back, I wish I had the benefit of history and knowledge, because if that were the case, it seems like there would not have been a decision. The PIOB and IESBA would not have agreed to and explore this further. And that's why we're doing this research, is to gather information on our own, so we have the facts and the evidence in front of us. But yeah, I mean, well said, and we'll kind of look at it with reframing. So thank you.
Okay, thank you, Mark and Linda. Tomoyo, please.
Thank you, Chair, and thank you, Linda, for the presentation. So actually, I work in an asset management company, and we set up many mutual funds. So in the first place, I feel very strange to be said external or unrelated. We are the ones that is setting up the CIV. So it's kind of an auditor lens and to be. So my suggestion is, can we, if we have to say something, then can we say like undefined or uncovered or such kind of things? Unrelated feels very odd to me. And that's the first point. And so naturally, I believe the auditor of the CIB. Let me take my case. So the auditor of the mutual fund that my company set up, and my company, there should be independence for sure. So there's no doubt here. And I think that is covered in the conceptual framework. The only part that is missing might be the related entity in the code might not cover my company, and that's it. So the other thing is we need to be very understand the nature, the purpose of CIB, which is quite different from the traditional corporation. We get external money, get money from the investors, and invest into securities or whatever. So we have a fiduciary duty for those investors. And this fiduciary duty is a very key word for CIVs. So I think we should put those nature or the purpose, the commitment that we have to the CIV, and such kind of thing is the consultation paper. Otherwise, if we distribute this to the world, the people like me will feel very strange and won't understand what we are talking about. So I think that is important. And that's it from my side. Thank you.
Thank you. Tomoya, can I just kind of explore a little bit further? So you talked about the fiduciary duties of the CIVs, right? Yes, the asset
Yes,
managers.
CIV manager, yeah.
Yeah,
Yes.
exactly. And I understand that. But I'm trying to kind of figure out how that plays in with the independence point, because yes, absolutely, there are fiduciary duties, and those definitely mitigate risk, and that's very important. But what we're looking at is this third party, the whatever kind of third party, whatever third party.
Yes.
We're really looking at them and whether the auditor whether the auditor is independent of that third party. So I'm trying to figure out, as far as like, if we do anything to the consultation paper, I'm trying to kind of figure out how the fiduciary duty point would come into that.
So we as the asset management company have the fiduciary duty to the investors of the CIV.
Right.
So what I want to say is, so the auditor of the CIV, independence between asset management company and the auditor of the CIV is very important to meet the fiduciary duty. And so that's how we can phrase to explain the importance of this topic, or to define where we need the independence between the auditor of the CIB and what we call the third party.
Okay, thank you very much.
If I may, before we proceed with the other questions, thank you very much for your intervention, Tomoyo. I think it was precious. First, on your comment on the unrelated entities, I see your point, and I think this was the reason why Christelle was making her comments, because she was saying, well, if they are unrelated, then they are unrelated. What's the problem? But I think that it's a matter of words and saying that they are not considered under the definition of related entities.
Exactly.
So this is a wording problem, and if you put it like this, Christelle, I think that your problem, this one, gets solved, because it's about entities which are not covered under the existing related entities concept. Then, on your point on the fiduciary duty and the question, Linda's question about how should we frame it, I think that if I got your point right, but I'd like you to confirm that, I think that your idea is that because your managers, asset managers, have a fiduciary duty, it means that all their options and management decisions must be made in the interest of the investor. And that includes, of course, ensuring independence and all these things. This might be framed as an additional element to be considered when assessing if there is anything else needed to ensure the independence of the auditor. And thirdly, I think that there may be some confusion sometimes, not in your intervention or here, but before we proceed. I heard some questions last week at the IFAC board meeting where I presented and said something about this, that some people around the table thought that we were regulating the CIVs. Well, first of all, we are not regulating anything. We are standard setters, principles based. And secondly, the focus of this project is not the CIV. We are not, we will never be directing any kind of standards to the CIV manager, actuary, or whatever. The subject and the focus is the auditor independence and what must be covered. And then, of course, my managers will do whatever they need to do in that respect. So I think that this clarification, thank you very much for your intervention, Tomoyo, because I think it was really important to separate here a few things. So then Nancy, please.
Thank you, Chair. So want to start out first by saying that I certainly support the consultation paper. I think it's important to get further information on this topic. I did provide feedback last week, including some fairly detailed commentary, but I want to maybe address a couple of key themes based on your presentation, Linda. I think first is about scope, and I'm going to use the term unrelated third party because that's what's in the paper, but appreciating all the comments that have just been made here. I do think that when a stakeholder gets this consultation paper, I think it's very, very important that we are clear on the narrow scope of what we're asking. And when you look at the paper, I think we do have questions and some analysis based on related entities. And if we're really only focused on what is the PA's responsibility, obligation in protecting the public interest with respect to these circumstances where there's unrelated third parties, I think that that's what we're really trying to drive to here. And I'm not sure that the consultation paper is quite clear and focused on that as a scope based on some of the questions. My second comment, and several people have commented on conceptual framework. I'm personally a fan of the conceptual framework. I think it is a very, very effective tool for auditors to use in these situations where you don't have prescriptive rules. And I think particularly in this environment, which we have already described as quite diverse, it's not a homogeneous environment, and an environment where I think that there is, depending on jurisdiction, already a lot of regulatory oversight that in fact may address even the things that we're talking about today. And my point being with the conceptual framework, and I think Mark, I think made a terrific point here, but we really don't ask that as a question in the consultation paper as to whether or not the framework is effective in this. And I'm not sure, given the diverse environment, that you would ever be able to really adequately create a set of standards that would address all the facts and circumstances. So I think it's really important that we not diminish, one, the power of the conceptual framework, but also that making sure that the paper itself is addressing the potential value and use here. The other point that I want to make, sort of along these same lines, in the lack of homogeneity across this environment, is I mentioned earlier that you have a number of regulators who are already in the space, SEC clearly being one, with respect to ICCs. And I think the question is, and it kind of ties into conceptual framework, is the power of the independence conversation, is that partly jurisdictional regulatory oversight combined with the conceptual framework, and are we adequately getting that notion into the white paper? Because my fear is that if we're not very careful in how we pose the questions, we're going to get answers that are going to just lead into, rather than asking for a really diverse set of responses. And with that, thank you.
Thank you very much, Nancy. Those comments will for sure be taken on board by the group. Thank you for it. I think that there is a lot of value in a few things that you suggested to enhance the quality of the paper. Sadia, please.
Good morning, everyone. So firstly, I think we should agree that we made a decision as a board a few meetings ago to delay this process. And I do think that was the right decision. Time has helped. And some of the things that I'm seeing in the consultation paper has resonated with me. But I thought that I'd put my card up and agree with some of the points that have been made. So the first one was the point that hasn't yet been made, and that is the independence, the way I see it, is the independence between the auditor and the CIV, and there's a question mark whether that independence includes the fund manager. But any relationship between the CIV and the fund manager wouldn't be caught by that word independence. It would be objectivity. And it kind of comes from the conversation we've been having in experts about what's that relationship between the auditor and the expert. That's not independence, that's objectivity. I like that the paper defines it as just being independence, but if we're going to get into that relationship, we need to spell it out. The point that Nancy and Mark have made about the conceptual framework, I think it's question 2. Question 2, we go straight ahead into reason knows and has reason to believe test, but we need to ask the conceptual framework test. Saying that this is not covered by the conceptual framework is incorrect. We all agree that it is covered in some way or form. I think what we need to test is that whether respondents to the consultation paper are all reading it in the same way. And if they are reading it in the same way, what is that way? And then clarity will come with that process. Thank you.
Thank you very much, Sadia. Linda, do you want to react? Okay. Rania, please.
Yeah, thank you. So my comment is actually related to Christelle's and Tomoyo's point. And at the risk of sounding as an oversimplification, like I'm looking at this flow chart, and what I'm not getting is why isn't the question, or in my mind, the question really is, shouldn't third parties that are providing these services, shouldn't they be scoped into the definition of a related party? I mean, isn't this the question?
I think That could be a question, yes. Okay, you could look at it that way and say, okay, should they be scoped in? But based on our research, we did not want to go in that direction because we found some reasons that maybe they should not be scoped in. So therefore, we are taking kind of a more neutral approach to just, like I said, kind of funnel through and figure out exactly what are the activities that are being performed, what are the relationships, and then how is the accountant determining or assessing independence?
Yeah, the way I see it, I think this is one of the a key question that should be in the consultation paper, because I mean the way you define those services in item 30. I know I don't want to get ahead of Jean's presentation, but responsible for decision making and operation of the scheme, materially affect the performance, success, or failure of the scheme. It seems to me like I mean, as I went through this consultation paper, and I have to say it's really very well done because it's a complicated subject and it flows very nicely. But it was just, I mean, why aren't we asking this question? It is a form of control. It is a form of influence. And I think, at least if I understand that you don't want to make any presumptions, but I think it's a question that should be asked. Is it, I mean, that's basically what we're saying. Control is not just financial control, there is also operational control. And that is, I mean, that is relevant when you are considering, for example, consolidations and financial statements. So operational control, contractual control are forms of control. And so this really fits or aligns with those types of control. So.
Thank you, Rania. I understand. And it's interesting because your comment when you talk about control and how there are different types of control, and we've had similar comments from others, and that's something that, I mean, I think it would be perfectly fine for the board to just. I don't want to get ahead of ourselves and then go straight to talking about how to change the standards. But I take your point, and so maybe we try to figure out how we can ask the question without putting anybody on high alert that we're going towards a specific proposal.
Just to add, so I mean, because in that case, I would see the flow chart being significantly simplified, and our job as a board, and especially if we want to stick to the the principles-based approach, is just really considering that this is a form of control and everything else will flow really smoothly from there. So just something for your consideration. Thank you.
I think that the flow chart is more for us here to understand where the group is focusing, not necessarily something then to explain whatever conclusions we might draw from this exercise. I think it's a procedural flow chart. So thank you, Rania. Linda and the group will surely reflect upon that. And Obi Shoku, please.
Okay, thank you very much. Can you hear me? Can you hear me?
Yes, we can hear you. Okay. There is a little bit of noise, but we can hear you.
Okay. Thank you so much. And a good job on the consultation paper. But what point I want to make is, having been involved in an audit of a pension fund that is like a CIV, where the audit client has different fund managers that manage different amount of their pension funds. So the audit firm I was working with then, we approached those fund managers as audit clients as well. So my point using this example is just to buttress what some other people have said, because the independence issue was looked at using the consensual framework. It can direct the auditor on how to assess and how to rate the fund managers or asset managers. So each asset manager that was involved in that audit was seen as an individual audit client, and we had different audit teams audit them. So, and then after all the audits, then we made the report to the CIV, as in the actual owner of the funds. So my point here is that this consultation paper, trying to revise the code to bring in CIVs to recognize them as related party or otherwise, I'll suggest that maybe like an illustrative or a non-authoritative paper can be used just to write an article on the independence, just to make auditors bring it to their attention in case that some jurisdictions are not looking at it or they don't really consider independence when they are doing their audit of CIVs. But to revise the code, since the code is principle-based, I think that might not be the best. Just like Crystal, I guess, said, there are many other issues. And like what you said about the third party, that you don't, like what Linda said, they don't want to tamper with the third party, bringing in some other scenarios. So since it's principle-based, we can never address everything. We cannot bring in every situation into the code. So since the conceptual framework has handled it, any auditor that's actually working with the code and with the IESB standards, you know what is required of you. You're supposed to understand your audit clients. And for CIV, you have to understand that those fund managers are like audit clients. So you have to do your independence checks in planning the audits. So my point is just that maybe a non-authoritative material might be used instead of revising the code. Thank you.
Thank you very much, Obichukwu. Linda, you want to respond?
Thank you, Obichukwu. That was really helpful, and thank you for sharing your experience with respect to the audits of pension funds and the asset managers, or I believe fund managers, being included as part of the audit client. Did you say, sorry, I wanted to clarify, did you say you got to that determination using the conceptual framework, or is that a legislation or regulatory requirement?
Okay, at that time, I'll just say it's based on the audit procedure, just understanding your clients. You understand that you understand the extent of influence they have in the financial statements. So this is what we need to do. At that time, we didn't actually look at the conceptual framework as it is, but it's just a residual knowledge, something you know that this is what should be done. Not that like we consulted the code at that time, but it's just something that's in your mind as an auditor. This is what should be done, given the materiality, because they actually manage the funds, they make the investment decision, the accounting, the records are with them. So you have to go to them to actually see the transactions and be able to audit. So that's how we did it. We didn't consult the code at that time, but it's just a residual, something you ought to know.
Yeah, very, very good point. I understand now. Thank you for the clarification.
Thank you both, and thank you for your practical example, which is always good to see how things work in practice. Thank you very much, Obichukwu. I think that we had Luigi.
Thank you, Chair. When I examined the picture, the flow chart, it seems to me very clear what we would like to achieve with this consultation paper. The wording could be changed, could be improved, maybe also on the basis of this discussion. But it was very clear. When listening to the presentation, though, I found an inconsistency, or at least I perceived an inconsistency. The purpose of this document, I understood, was to explain that there might be a situation where the independence with respect to the audit clients, so the collective investment vehicle, may not be properly assessed. By listening to the explanation, I heard that it was presented as the need to be independent from the third parties, certain third parties, which I found incorrect at that moment, because it is a conclusion that not necessarily is aligned with the purpose of the document as explained here, because simply requiring independence from third parties is not the purpose. The purpose is being sure that an auditor is independent from the audit client for the target entity which is under the audit. It may be that this may be a solution for certain selected third parties, but cannot be a solution for all third parties. It depends. And I found that it could be improved, but the paper was going into this direction. So I need to be, I would like to be very careful when dealing with this matter and concluding upfront that the solution, or as it is presented, someone could perceive the solution as being independent from third parties. The issue is being independent from the audit client and identifying whether or not there are threats to be assessed and whether or not the code is fit for purpose at the moment. And for this reason, I appreciate what it was said before about the conceptual framework. I think that the conceptual framework is there, is complete. Maybe, and this is probably one of the questions that could be asked, maybe it requires additional guidance, explanation, I don't know. If we feel that this is the case, probably this may be a question to ask. And if we go into this direction, probably it is also clear that the paragraph that you, Linda, mentioned before in the code, the factor to consider, but it is already there. It is already conceptual framework. It is already dealing with indirect services. And I don't think that the issue is really the concept of indirect services, because if the code is used in the proper way and the conceptual framework is applied in the proper way, then the indirect service is not an issue with any third party providing them, frankly. Maybe there are other threats. And the purpose of this consultation paper is really to try to gather feedback in order to identify whether there are threats, whether there is a need to be clear in certain matter, whether there is a need to address certain gaps and so on. So just to avoid to go too far in taking conclusion before getting all the facts and circumstances.
Yeah, thank you, Luigi, for your comments. I just want to maybe provide some clarification on the presentation because I did see some nodding of heads. You made the comment that the auditor should be independent of the audit client, and that's really what we are looking at. But I think therein lies the problem. These related entities that we're referring to don't fall under the definition of audit client. So there's the problem. There's the issue. So I think if we just look at this and say that the project is about independence from the audit client, then we're missing out on those entities that are not part of the audit client. So how does the accountant assess or identify threats to independence? So am I missing something?
No, sorry, maybe I was not clear in explaining myself, and sorry for that. I understand the point. My point is, before arriving here, the issue is for an auditor to be independent from the target entity of his audit work. So just this entity or entities, if it is a group. Then the logical construction of having related entities respond to certain perceived threats and so on. Before going into saying, well, there are third parties entities that are not related entities, and therefore the auditor need to be independent with respect to these third parties, further analysis is needed in order to identify whether this is really the solution. I'm not sure. I'm not saying it is or it is not. I'm saying that we cannot simply assume that due to the fact that they are not related entities, there is an issue. Because maybe there is an issue, but it is not due to the fact that they are not related entity. So I would try to refrain from taking conclusion without having all the information we need to take this decision.
Okay, yeah, we definitely don't want to jump to any conclusions. So let us, yeah, thank you very much. Okay.
Thank you, Luigi. David Ray.
Thank you, Chair. So I think there are a few things that have come up that I'm finding really interesting, and I'll see if I can maybe try to tie some of these together a little bit. So one is, I think on the conversations that we've had around control, I would strongly suggest that we stick with a financial reporting definition of control and that we don't try to reinvent that, because we are going to confuse to no end the users that have to apply the code. So I think, to the point that Gabriella made a little bit earlier, it might be helpful, and tying into what Luigi just said, it might be helpful to refer to these as entities that have a significant influence on the audit client, but are not part of, not our audit client. Maybe that's the way to look at them. Maybe the wording can be finessed or something like that, but that's really what we're talking about. It's entities that could be significant in that sense, is the way I would look at that. And then I would say, as we talk through this, and I think we talked about this a little bit in September, is it would be really helpful to give an example of what we mean and kind of talk through the code and say, here's how the code would apply. And, is that sufficiently clear? So if we're talking about conceptual framework, for example, maybe we need to illustrate how the conceptual framework would apply and say, is this sufficiently clear? Because that's the real question, is can users apply it the way we intend to apply it? And if they can't apply it, then we know we have a gap and we need to address it. So whether that's through a standard modification, through NAM, through education, whatever, that can be addressed later. But I think that's the fundamental question, is can that standard be applied correctly? And I think a couple of other board members have talked about examples through a standard audit process. So perhaps it's something that's innately understood, but perhaps it's not. And I think that's the fundamental question that we need to ask is, here's the scenario. How would you solve this? Is it done through application of the conceptual framework? Is it done through legislation in your jurisdiction? And then we'll have an idea of how it's addressed without necessarily having to think through a specific solution. So I don't know if that helps, but just a couple thoughts to maybe tie together what some of the board members have said. But I'm also thinking about CFOs who ultimately have to do this, and they need to be able to do it in a way that they can understand it as well as the PAs who are well versed in this already. Thank you.
Okay, thank you, David. Rich, please.
Yes, thank you, Chair. So I agree with many of the things that board members have said, and I believe those are covered in comments board members and others have submitted, including my own. So I'll try not to repeat that. But on this last point, I think this is, I like the concept that we're going to put a consultation out to see what stakeholders think about whether there's an issue here. I am very concerned, and I think you were too, Linda, based on your response to Luigi, that we can't say things like, it's a problem that an entity isn't currently defined as a related party or related entity. We don't know that. In fact, I have seen no evidence that suggests that there is a difficulty in applying the related entity definition or the conceptual framework. And to that end, just to add what others said, I think that should be somehow one of the questions we ask is, are you having a hard time with applying that? Because my sense is to Tamayo's point, aspects of it are very clear that you have to be independent because the entity essentially has accounting control. It's a related entity as defined. But even without that, for example, if it's not a related entity as defined, you still under the conceptual framework need to understand, for example, if I built the system for company A that is being used by that company to provide the services to the fund, then that I would say under conceptual framework, that's a problem. And I can't do the audit, or I should not build that system if I'm asked to do that in advance if I am doing the audit. And so I think the marketplace, similar considerations are given to business relationships in that. I think in the marketplace, both the PAs and the entities are thinking about that, but it could be there's an issue, but I just haven't heard it. And that's why I think we should have that as one of the questions here. I also agree that we need to be more refined in the use of the phrase unrelated third party. We need to either define it very carefully or find another word and define that very carefully. Thank you.
Thank you, Rich. Luigi, do you still want to speak, or Okay, so Janine, I'm sorry, I know that you have been waiting for a long time, but I left you on purpose to the end. So do you want to come in now?
Thank you, Chair.
So-
Yes, a question. This is because I had a question on, when I saw the slides with the examples of a fund manager, for instance, thinking about whether he could engage with the audit firm for some other work. But it has to do also with comments already made. My question was, is it not the auditor that in the example should be focused on the independence of the auditor? And that also touches upon things like concurrence of engagements. Maybe the fund manager has a lot of other SIFs where he's the fund manager, and maybe the auditor is also the same audit firm in other. So those kind of examples are more, I personally think, also very keen, important to show in as examples for those who read the consultation paper, that they have this clear picture that it's, in my view, should be focused on the auditor independence and not in the first place on the fund manager asking questions about independence. Yeah, that was my question, whether you see that the same way. But I'm not sure, Chair, can I make some other comments, observations as a PIOB observer?
Yes, of course.
Yes. Okay. Yes, and this also touches upon another thing, because if you focus on this situation, then I see also overlap with, and it's excluded from the project, with private equity. Like you have investment managers, and they have also many investments. And if the audit firm is one of the investments, then there is a sort of kind of similar kind of thing. And I understand that private equity is excluded in the scope, but there is this, the same kind of issues are underlying here with the private equity, and private equity is also later on tomorrow, I think, on the agenda. But I just wanted to raise this issue that also, if you're going to do something on private equity and you have this consultation paper, should there not be something in there to explain not only that it's excluded here, but yeah, a lot of people would think about it and say, hey, there are also the same kind of underlying issues. So how do you want to address that? And then the paper talks about perceived gap. And I can remember in September, I had the privilege to observe this meeting, and then this topic was also on the agenda, that I raised the question, do we know, or do you know, how audit firms deal with these kind of issues in practice? And I still think it's very important. And if I look at the questions in the consultation paper, I don't see particularly, the questions around how they treat these kind of situations, how they use the conceptual framework. Because I think it's important at a certain point in time. I understand this and I appreciate this is an exploration kind of phase we're in. But at a certain point in time, when you would feel like, hey, we need to do something, you also need to be very clear and understand what the real gap is in practice, also to be able to come up with the right responses to the issues that you find through the consultation. So with a view to any potential follow-up, I think it's really important to really make it clear what the real gap is. A conceptual framework can work, but has of course also, it's less driving consistency in behaviors than if there are real clear independence rules, so to say, in a code. So but you need to understand what they do in practice, I think. Last but not least, there is, my question was also how to obtain then through the consultation paper, specific responses from investors, other users. Users could also be those that have their money put in pension funds and so on. How would they look at this issue? And how to reach those and get responses from those, what they would think and expect in terms of the auditor independence when there are these fund managers and asset managers that have real significant influence in those vehicles. Those were my comments. Thank you.
Thank you very much, Janine. Linda, please.
Yeah, thank you very much, Janine, for your comments. I really appreciate them. Let me just point out, okay, so the private equity session tomorrow, that's going to be a specific issue, private equity and investment and accounting firms. So it's about those accounting firms that are accepting private equity investment and possibly the things they need to be aware of with respect to that type of situation. So it's different from what we're looking at with this CIV project. Also, your next point, or I mean, I think all of these, well, the point about how to audit firms deal with this in real life. And we have met with some audit firms and spoken with them, but that I think is the point of this consultation paper, is to take this to a broader audience and really to find out how more than just the firms that we've spoken with, how do other firms deal with this? I think I've heard several different times that we need to maybe refine one of our questions or put more emphasis on the use of the conceptual framework and whether it's working or whether it's not working. So I think that's a really good point about how do they use the conceptual framework if they do use that. Very important to understand what the real gap is. Yeah, and again, we hope the consultation, the responses are going to help us narrow that focus to determine, is there really a gap here? And last but not least, very important about getting responses from other stakeholders. So we have, in our outreach, we've had offers of assistance from some different individuals to introduce us to different people that will want to respond to this. So we're going to go back to them. We're developing kind of a target list. So if any of you all have any recommendations, feel free to share those with us. But thank you very much for your comments.
Thank you very much, Linda and Janine, again, for your comments. I don't see any. Oh, sorry, Amajit, please.
I hope it's okay to come after PIOB. So last one to come in. So at a broader level, I think, as I said earlier also in our earlier discussions, let's not wait for a market failure. And there is a value in doing this project and exploring this project. Maybe we can decide whether we want to take it up full scale or not. To give you some perspective from India, the mutual fund industry is growing very, very rapidly. We are seeing like multi-fold increase in very few years. A lot of public money is involved, a lot of public interest is involved. So we do have some requirements in this space. For example, the auditor of the fund has to be separate from the auditor of the scheme. But we probably stop with that. We don't have many requirements. So the way I see it, I think there would be incremental value for various jurisdictions. Not that the jurisdictions have not thought of the problems in this area, but probably the response has been rather limited. Some guidance would help. Second point, so I support the issue of consultation paper. Second point I wanted to make, which has already been made by many speakers, I think need for more clarity in terms of with very easy to understand language, less technical as far as possible, with examples as to why the current IESBA code falls short of in the CIV situations, with some examples. And I think, Linda, you did a good job in terms of putting some examples in the slides. So that would be my second comment, need for greater clarity in the consultation paper when we go out. Thirdly, I have some comments on the specific questions. Maybe I can hold with that and do it after the second part. Yeah, thank you.
Okay, thank you very much, Amajit. Chana, please.
Thanks, Chair. Thank you for the project team for the presentation. Very well done. Just to comment on a couple of things, I also agree that this term unrelated third party could be problematic. And I mean, as Obichuko said, in understanding the client, the auditor did identify, who they need to be independent of. So maybe we need to have a look at that term. The other point is if the application of the conceptual framework would mean that you're always going to capture the correct entities, then at the end of the day, providing that guidance later on is, I think, valuable because we are not there yet because this is just a consultation paper. Because if you look at all the specific areas of the code, it's essentially the application of the conceptual framework. And if the application of the conceptual framework results in the same sort of conclusion, then there is value in providing that in the code, but that is something later on.
Okay, thank you very much, Chana. So, finally, Ken, please.
Thank you. It's always a fraught time and position to be taking the floor just before the break after very intense discussion here. I suppose I start off looking at this issue of CIVs from where the code is today. The code, of course, deals with normal operating companies, audit clients as we understand them. They have management, they have board of directors who are charged with governance, and the code importantly has the concept of a related entity. And there's a definition of a related entity in terms of which kinds of entities are to be considered a part of the audit client. And essentially the code then specifies to the auditor how they should be applying the conceptual framework in the context of their audit. Part 4A, in fact, as Chana rightfully has highlighted, Part 4A specifies how to apply the conceptual framework when it comes to an audit of a normal operating company. And paragraph 400.6, in fact, states, just if you wanted really to understand and see a very specific reference to this in the code, paragraph 400.6, which in fact has been highlighted, I believe, in the consultation paper, specifies or states that this part, meaning part 4A, sets out specific requirements and application material on how to apply the conceptual framework to maintain independence when performing an audit engagement. So the application of the entirety of Part 4A gives us essentially the application of the conceptual framework. It is not just one paragraph, it is the entirety of Part 4A. And as I say, in the context of a normal operating company, this is very clear. The code already specifies what needs to be considered in terms of the audit client. It's the entity that's subject to audit plus the related entities as defined. But when it comes to a collective investment vehicle, yes, we have the audit client, which is the vehicle itself. But then the question is, and that's a question that's, I think, from what I'm hearing around the board, there is a general consensus that, yes, let's get some clarity around how to apply the different provisions in Part 4A to the audit of a collective investment vehicle when this vehicle, in fact, is just a container. It is just a vehicle. It contains the funds, but in and of itself, that fund doesn't make decisions as to how to deploy the funds, which investments to have, et cetera, et cetera. Yes, there are fund managers that have fiduciary duties, as Tomoyo has pointed out. So in some jurisdictions, there will be legal regulatory requirements regarding the audits of those collective investment vehicles, but not necessarily in all jurisdictions. not necessarily. And therefore, what we are trying to address here is really the application, the clarity of the application of the conceptual framework as set out in Part 4A when we're looking at those investment vehicles. And what I mean by that is, for example, if you take the largest section in Part 4A, that's the provision of non-assurance services. Now, clearly, the audit firm, in most cases, will not be providing, for example, consulting services to the vehicle itself, or IT services, or legal services, or corporate finance services, what have you, right? Everything that's covered under Section 600 in the code. And therefore, what we're trying to understand here is, do firms consistently apply the conceptual framework when auditing those collective investment vehicles, when providing those different types of services, potentially providing those different types of services? There are other sections in the code as well in Part 4A that deal with independence, business relationships, employment relationships. How are these applied by firms in practice? And maybe that's to Janine's point. How are firms applying those provisions, and are they doing it on a consistent basis when auditing those collective investment vehicles? So that is really the crux of the issue. It's a clarity of the application of the code, and the code currently doesn't deal specifically with collective investment vehicles. It does absolutely deal very clearly with normal operating companies, but when it comes to collective investment vehicles, yes, it is really left to firms to apply Part 4A, meaning to apply the conceptual framework as they interpret their particular circumstances when they're looking at the particular collective investment vehicles and the parties, I suppose, that are involved in managing and helping to manage the relevant vehicles and in guiding the investments and so forth, right? So that is really what at least based on the understanding of the discussions here, is really what we're trying to get at, right? And I think we can clarify this in terms of the approach to the consultation paper. It is not really, as some board members have rightfully pointed out, it is not really to imply that the code should revise the definition of a related entity necessarily to capture certain other third parties, but it is really application of the conceptual framework, and whether that is clear enough, and that application will be consistently done across the board, no matter which jurisdictions, no matter which firms are actually doing the audits.
Thank you very much, Ken. So very important clarifications, which I think are very useful. We will now break, but before we do, let me just try to not wrap up, but try to refer to the most relevant takeaways from this very juicy discussion. And I think that there is a burning topic or question here, which is whether the conceptual framework is enough or is not enough to address these independence issues. And I think that was all over. It was Mark who started with that question, and Christelle somehow, but it's one of the main questions. The concept of unrelated entities, which has created some unquietness and some concerns, which has to be, or probably should be, looked at. The questions and how much we are trying to get information about how the firms are applying the conceptual framework to try to understand if this is enough, if it's not enough, if it's enough clear, like Ken was saying, or not. I think these were the main questions. But then there is an additional topic that we started by discussing, which is from which perspective should be seen. And for me, and I think that for us all, it's clear that it's always from the public interest perspective. So whether these funds or the other funds, or these related parties or those related parties, the fiduciary duty and etc., I think that what will at the end decide anything is how much this may impact the public interest, and if there is anything that we need to do with that. No time. This is not the time for any conclusions. This is the time to draft the consultation paper in the right way, so that the substantial contributions and inputs that we are seeking will be the right ones, focusing on the right information that we need to have, and with all the clarity about what we are looking for. With the focus on the auditor and the auditor independence, not the focus on the CIVs or the pension funds, to which I'm sorry, I'd love to, but we are not the ones in charge of regulating or setting standards for how the CIVs work. We have to take the reality, work on that reality to take conclusions in the future about auditor independence. So thank you very much. This was a great discussion to kick off the meeting. And now let's break for, we are 10 minutes late, so we'll reconvene at 11:20. 11:20, 20 minutes past the hour for those attending online. Thank you very much. Okay, thank you for being back to the room and to the discussion. Before I give the floor to the working group and to John Reid, let me just ask you again, please, when you speak, to speak close to the mic and directly to the mic, because there were some complaints that people cannot hear some of you. So I'm sorry for that, but be careful and make sure that you speak close to the mic. If you have to eat the mic. So we are now going to the second part of the presentation and discussion on the CIVs. And for that, I'm going to give the floor to the working group and concretely to John Reid, right? For the second part of the presentation and to guide us through the last part of the discussion. John, the floor is yours.
Thank you very much, Gabriella. If we could just bring the slides back up, thank you. Just go to, I've got this thing. Okay, so I'm just going to initially walk you through part 3 of the consultation paper. So this sets out the application of the code to investment schemes. So just actually back to Nancy's point that she made before around the scoping of the consultation paper. So what this section is just, it's trying to establish how the code works for investment schemes. And the first part, which is in part 3, it talks about where there might be a management company or an investment advisor, for example, that might actually be a related entity of the scheme. And the reason being is that this is kind of us stepping through the process of decision-making for the auditor in terms of how to treat a particular entity with respect to the auditor independence requirements in the code. So first and foremost, the code makes it clear that it's in the public interest for auditors to be independent when performing the audit. And accordingly, they're required to be independent of the audit client. And as Ken mentioned before, just before we went to the break, the auditor must apply Part 4A of the code with respect to the audit client. And Part 4A outlines how to apply the conceptual framework to maintain independence from the audit client. Part 4A also sets out specific prohibitions for certain services, interests, relationships, or circumstances related to the audit client. The code also, in Part 4A, it also includes provisions to ensure independence from or is maintained from the audit client, but some of these provisions actually relate specifically to the client's management, or it can be employees who can impact the audit client's financial statements on which the auditor will express an opinion. So this relates to things like some certain business relationships, family and personal relationships, recent service with the audit client. So, and then if we just go down to the bottom of that flow chart, in addition to that, then obviously the auditor still needs, which we've been talking about this morning as well, is that the auditor still needs to comply with the fundamental principles and independence and apply the conceptual framework. So this is with respect to other interests, relationships and circumstances that might create threats to the fundamental principles or independence. And then part 1 of the code around the conceptual framework, as well as part 3, also provides a path for auditors to consider facts and circumstances that might create threats to independence. And then, for example, the fundamental principles, integrity and objectivity, they also underpin independence. So this, the next flow chart, which is set out in the consultation paper itself, so it essentially sets out the application of paragraph R400.27 of the code and sets out the process by which auditors consider whether a related entity should be scoped in with the audit client for the purposes of evaluating independence. So if we go down the left-hand side of the diagram, when the audit client is a publicly traded entity, that means all related entities are included as part of the audit client. So this would include upstream, downstream, and sister-related entities. So a publicly traded entity is one that issues financial instruments, and they're transferable and traded through a publicly accessible market mechanism such as a stock exchange. So a listed entity is an example of that. So then when we go down the right-hand side of the diagram, so if the audit client is not a publicly traded entity, that means entities that the audit client has direct or indirect control over are included as part of the audit client. And then in addition to that, there is a test within that R400.27 that if the audit team knows or has reason to believe that a relationship or circumstance with any other related entity is relevant to the evaluation of independence, then those related entities must be included when identifying, evaluating, and addressing threats to independence. So in other words, to comply the conceptual framework with respect to those other related entities where there is a reason to believe that they need to be included within that evaluation. As we've already mentioned today, that the element of control or significant influence is fundamental to determine if an entity should be classified as related or not. Those terms are not defined in the code, so significant influence or control are not defined in the code. And what we've seen is that concepts are generally determined at a jurisdictional level, and it might be under a financial reporting framework, but we've also seen examples where it's also set out in laws or regulations. Whoops. So the next slide is just providing an example where we have seen some examples where a third party to an investment scheme is actually a related entity of the scheme. And it sets out, that particular example. So in this example, the third party would be related an entity under Part A of the definition of related entity in the code. And where the third party is a related entity and the code would apply as it would for any other normal operating structure. So a normal traditional corporate structure that we would normally understand. So if we follow the flow chart down, so if the investment scheme, the audit client is a publicly traded entity, that means that all related entities, including the third party, are included as part of the audit client. And that means Part 4A is applied with respect to the audit client and those related entities. However, there is an exception in R600.27 for certain non-assurance services and management responsibilities that relates to upstream or sister-related entities, but as long as it doesn't impact the actual audit that's being undertaken. So, for example, that they can't be expressing an opinion on that third party's financial statements, not assuming management responsibility for that particular entity, and it doesn't create a self-review threat. And if there are threats, that those have been addressed and reduced to an acceptable level. So then if we follow the diagram on the right-hand side, so if the investment scheme audit client is not a publicly traded entity, so then entities that the audit client controls, either directly or indirectly, are included as part of the audit client. And Part 4A applies to the client and those related entities that it controls. So in this particular scenario, the third party controls the audit client and not the other way around. So the third party wouldn't be excluded from the audit client in this instance. However, if the audit team knows or they has reason to believe that a relationship or circumstance with any other related entity, which would include that third party, is relevant to the evaluation of independence, then those related entities must be included when identifying, evaluating, and addressing threats to independence. So when a third party is a related entity under the code, the provisions apply as they do for any other entities, and therefore that's not the focus of the consultation paper. However, we felt that we needed to address that to ensure that the readers understand that this is the application that relates to this sort of situation. But in that event, that the code would apply as it would as per normal, and that's not really a concern for the IESBA in particular in relation to this particular project. However, the project team is interested in views, and this again actually comes back to a point that Ken made. It's about whether the code is addressing all the threats in these particular scenarios relating to collective investment vehicles or pension funds. The reason being is that Part 4A, I guess, was developed for those traditional operating companies, but also interested in stakeholders' views about whether the application of the conceptual framework and the knows or has reason to believe test, whether it requires any further clarification or guidance for investment schemes and related third-party providers. So hence, we had included these in the draft consultation paper, these two questions. And yeah, so one is with respect to the investment scheme, where they are a related third party, whether the code is working appropriately and addressing all the threats. And then the second one is around the knows or has reason to believe test. So we did get some advanced comments in relation to these particular questions, which goes back to Nancy's comment before about the scoping and that this could create confusion, I guess, if we're asking these questions, which are not the main focus of the consultation paper. But however, as I said, the reasons for that is just to ensure the status quo is working in these particular instances. But we'll pause there and just to see if there are any comments and questions relating to the content in Part 3, but also those particular questions that have been proposed there. So I'll go back to the slide with the questions.
Thank you very much, John. And I'm opening the floor for questions or comments. Nancy, please.
Thank you, Chair. So, John, as you noted, I brought this up in my earlier comments. I also provided some feedback to you very specifically on this. In general, I think what we're tackling here is fairly complicated, right? And there's a lot of time spent in the consultation paper walking through a decision tree about what's in scope. My concern is if the scope is focused on, and again, for lack of a better term, unrelated third parties, I think by starting with these two questions, it's inconsistent with, I think, what the objective that we're trying to obtain in terms of getting information. And I just wonder if, given the type of feedback that we think it's really important to achieve, given that we probably only have so much opportunity to ask questions, since I think we want very thoughtful responses from stakeholders, that is this really the most important questions that we should be asking? And by leading with these questions, are we perhaps either confusing the respondent on what the direction is here, or is there a bit of that this may influence answers beyond, again, what our key objective is as you kind of work through the questions in a linear fashion. So I still believe that perhaps, again, given that we can't ask dozens and dozens of questions here and expect thoughtful responses. Are these the most important questions? And I would just thoughtfully suggest that there may be better questions to ask. And I think we heard in the last round of board discussion that there, I think, probably are better questions with respect to conceptual framework. I heard comments on about providing perhaps examples and whether or not those are fit for purpose. Thank you.
Thank you very much, Nancy. Amarjit, please.
Yeah, thank you. A very quick comment on question number 1. Something on the lines of what Nancy said. I think this question is very broad. If we can make it a little more specific, seeking questions on where there is a potential gap For example, this 600.27, which gives a carve out. So will that carve out hold good for the CIS scenario, for the CIV scenario? In short, it's very broad and I guess more specificity is required. Thanks.
Thank you, Amajit. Rich, please.
Yes, thank you. First, I guess it's a technical point, but I think I should raise it. Whenever we in the slides say, is the entity a publicly traded entity? The application of the code for publicly traded entities requires that PTE be a PI before the related entity rules apply. And given jurisdictional refinements, there will be publicly traded entities that are not PIs. So I think you need to clarify what you're talking about as PTE that is a PI. Everybody else is a non-PI in this application. On the questions, first, I'm going to start on the first question. I've obviously submitted comments, so you can see those. But as I look at this question, it asks about the application of the existing code to related entities. And related entities are, by definition, the code part of the audit client. So you are asking whether there are threats not covered by the code that applies to any audit client by asking this question. And I didn't think that was the scope of this project. Are we going to add additional threats to the conceptual framework as part of this? Otherwise, why are we asking this question? We know what applies to related entities. I thought what you explained earlier is that there are other entities that don't fall within the related entity definition that you want to consider threats. And I would remind that also as we look at this as it relates to the existing code, the only exception related to related entities is largely around non-assurance services, and only if those services don't impact the related entities, the activities of related entity don't impact on the audit client. It doesn't change whether you can what or how or whether you can have a business relationship with those related parties just because they're up or over sister entities. So I'm not real clear what that first question really trying to solve. It seems irrelevant. Thanks.
Thank you, Rich. David, please. Sorry, John, sorry.
Is it right if I just clarify a couple of things there, Rich? With the question, yeah, take your point, and like I mentioned at the start, there wasn't the intention to ask about the all entities. It was more trying to be specific to collective investment vehicles, and whether the Part 4A, which like we've talked about, wasn't necessarily developed for these types of vehicles, and whether there was anything particularly specific or different that wasn't being captured in the current provisions. But yeah, take your point on that. And we have received, not just from yourself, but from a few others, two others, I think, on advanced comments with similar things. So we'll certainly take those into consideration. I did just want to clarify your point about the PTE and the PI, because when you look at paragraph R400.27, which scopes in who's the audit client, it specifically refers to publicly traded entities, not public interest entities. So I just wanted to clarify what you meant there around that we should be referring to PIs and not publicly traded entities.
Well, if you're, I'll come back to you on that separately, right?
Thank you, Rich.
Okay. John, can we move? Thank you. David, please.
Thank you, Chair. So I'll be honest with you, when I read the CIV papers and the questions, I had to read it several times. And I don't know if I speak for other board members as well, but when I put myself in the shoes of public interest, I find these things really difficult to understand. And most of us has been exposed in some way to this. So what I would encourage the working group to really think about, and I think it's coming out in Rich's comments, for example, and some of the way the questions are worded, is think about using language that's more accessible and clearer in a way that it can be understood more broadly. Because if public interest is who we're really looking at, then it's everyone. It's not just individuals who are in profession and do this, you know, day in and day out, and obviously are well versed and well experienced in this. So that's, I don't know if that helps, but it's a comment that I'm hearing as a theme in some of the feedback, that it's sometimes quite confusing. I personally did find it confusing. I had to read it more than once to say, what are we actually trying to say here? So I don't know if that's helpful or not, but just something to reflect on.
Thank you, David. Tomoyo, please.
Thank you, Chair. When I saw these questions, I wasn't sure whether this is the type of the question we should ask. I think we need to more understand the fact around CIV. So sorry to use my case as an example all the time, but CIV is a vehicle, and there is a management company that set up that fund, the vehicle. And that is the one who selected the auditor of the CIV. So my company select the auditor of the CIV. And and then naturally, so there should be independence. We can understand. So like the question is, who decides the auditor of the CIV, or do you so in case of my company, we use the same auditor for the funds that we manage and the auditor of our financial statement, and whether that makes sense, or we should select another auditor. So like we should, I think it will be worth to look into whether the management company use the same auditor for the company, for the CIB, or a different company. And if you use the different company, why is it? Or if you use the same firm, why is it? Or the other example is my company disclose the fee that we pay to the auditor of the CIV, the mutual fund, in our disclosure, as same as the non-assurance service. So do we all understand that those management company do that? And such kind of fact, I'm not sure whether all those things are recognized by the working group or the board member before going to detail about what is missing in the code or such kind of things. Do you understand what I mean?
Well, personally, I fully understand. And I'd like to provide some additional comments, but I'll probably let the other members, board members, contribute, and then if necessary, I'll say something. Mark, please.
Sorry, is it okay to interject?
Yeah, sure.
Thank you for the comments, but it's interesting too, because what you've just explained there, we've seen like variations of that. So for example, I think Amarjeet mentioned earlier that in India, the auditor of the fund cannot be the same as, so it's like kind of almost the opposite. But we've also seen examples where the management company might be determining who the auditor is, but they're not just considered to be a related entity or part of the audit client in different jurisdictions. So it's like exactly what you're saying, I totally agree with, but we have seen variations of that, which is part of the issue that we're trying to address. So.
Okay, thank you very much, John. Now, Mark, please.
Yeah, thank you. This sort of gets to the heart of why this is really difficult, because when you look at how these constructions work in different jurisdictions, in many there is a misalignment between the legal form of the manager and the economic substance. And what we're trying to do is we're trying to make a proposal, or we're trying to gather evidence to see whether there is a proposal to change the code. but that is really hard because dependent on the legal applications that apply in your jurisdiction, you could have a totally different answer as to whether or not you have got an ethical or independence threat to address that isn't already addressed by the conceptual framework. And that comes out very clearly from Tomoyo's example of this is how it happens. But in other jurisdictions, it will be a very different thing. So, you know, in many, you will look at the manager, it will be an entity, it has legal form, and then it's deemed to have legal presence. However, in others, it's not. And so therefore, we may struggle to come up with a single set of proposals for the code because the legal situation will diverge so significantly in different jurisdictions.
Thank you, Mark. Rania, please.
Yeah, thank you. So I wanted to keep this question till later, but I think it ties in with Tomoyo's point and Mark's point. So my question is, and I don't have an answer to this. So are we saying that when the auditor is auditing the CIV's financials, they're actually expressing an opinion on the assertions made by that third party? I think that's an important, because typically when you're conducting an audit, we're issuing an opinion on certain management assertions. And the question is, whose assertions are we actually issuing an opinion on? And I think that might be one way to like sort of work through this issue. So if it's the asset manager's assertions, then I think that sort of like gives us a direct answer. And I'm not sure how, if that is always the case or that is just a very specific case, but something to think about. Yeah.
Thanks, John.
Again, we've seen variation, I think, and that's again part of the problem. So as an example where it is the management company that's undertaking all the activities, et cetera, but in some jurisdictions, they're saying because it's being undertaken under the auspice of what the board, this is in a corporate type of fund, for example, but the auspice of the board, and they're directing or providing strategic input in terms of how, and they're following that strategic advice from the board that it's, again, not considered to be a related entity in that particular instance. But again, yeah, variations. Yeah. So thanks for your comment.
Thank you, John. Rich, do you want to still? Okay. So I think that it's important. This is a very interesting discussion because it shows very clearly where everyone is coming from and some possible refinement of the scope and the perspective that we need to take. I think that Tomoyo, again, I think your contributions are especially welcome and important because you come from the practice of the other side of the investment fund, of the investment management company or whatever. So that perspective is very important. And again, I think that what you just said about how you select the auditor and the considerations that you take in selecting the auditor brings something important, which is there is already something in place with respect to the conduct of the fund or of the investment fund, which is relevant to give some confidence or comfort that there is some that the fund itself or the management firm addresses some concerns. Now, our perspective, and I think that this has to be made absolutely clear, the perspective here, the perspective of the working group, the perspective of the IESBA is on the auditor. Of course, we need to take that reality in consideration and not pretend that there is nothing. They do whatever they want. They don't have to fiduciary duties and all these things, regulations, very strict regulations. But the perspective here is the perspective of the auditor, because the IESBA code is a code on the auditors and accountants' behaviors, ethical behavior, independence, and etc. So that perspective should be absolutely clear in all moments that what we are doing here is to try to understand if the existing independence provisions for the auditor are sufficient enough, strong, and fit for purpose for the auditor of the firms, given all that reality. So we need to separate two things, even if I agree that we probably should import a little bit more information and or evidence of information about how the funds, how these entities work, how they are managed, and etc. And even if there are some variations, I think that I risk saying that in almost all jurisdictions, if not all of them, there is an entity which is in charge of managing and making the decisions, since the vehicle is a vehicle and does not have its own thoughts and etc. Still, irrespective of the variations, I think that we should try, of course, taking everything into consideration, but stay a little bit away of this diversity. But again, focus on the perspective of we are speaking about a code of ethics for the auditor and about the decisions that the auditor needs to make, because we can there is a possibility, for instance, that the manager, even in face of all the regulations, decides to hire or appoint an auditor which does not formally fulfill the independence requirements. Still, the auditor has to make a decision whether to accept or not to accept the position, the contract, the engagement, and etc. So I think that this clarification is important to avoid also that perception that I mentioned in the first session, that some stakeholders are saying, do you want to regulate investment funds at all? No, we don't want to regulate anything first, and we don't want to regulate the fund nor the way that the funds are made or the investment funds are making the decision. It's about the auditor behavior and choices and approach to independence considerations. Ken.
Thank you, Chair. Yes, I'm just wondering how to assist the project team in moving forward relative to questions 1 and 2. And I do see board comments here and board reactions as to the broad scope of those 2 questions, and the fact that the questions might be perceived as essentially asking as to whether the code and more specifically the code provisions addressing related entities are fit for purpose. And if one were to apply the related entity provisions in the code as they are in the code, one would essentially have no questions, because the code already is very clear as to which entities are related entities, and it just becomes a matter of applying the provision as it is. But I just wondered if you really wanted to address the application of the related entity provision to the world of collective investment vehicles, whether we should not in fact flip the question over to ask whether the code's related entity provision ought to be applied in the context of collective investment vehicles. And just to use one example, if one were to have a controlling entity over the collective investment vehicle, and the collective investment vehicle is material to that controlling party, and the code's related entity definition, that party would be, well, it would be a related entity. And should the question in fact be whether that related entity, whether that controlling party should be a related entity, because precisely we're dealing with a type of audit client that's not a normal operating client, where you would have the entity that's controlling the operations of the audit client. So that could be a more focused question that would be more specific to the world of collective investment vehicles and that we're dealing with here, because the question, especially question 1 as it is worded currently, is very broad, and as Rich and others have said, perhaps it's not going to help make us any wiser in terms of where the code is today. So that's just just some food for thought as to whether, in fact, turning it over and, in fact, maybe asking questions of practitioners out there as to whether they are, in practice, are applying the related entity provision as it is currently articulated in the code, in treating those controlling parties as related entities when it comes to collective investment vehicles, or whether, in fact, there should be a different approach in the code, because precisely those entities do not fit the mold of a normal corporate commercial entity.
Thank you very much, Ken. Amajit, I see that you have your. Okay.
Very quick reaction to what Mark said. I think he makes an important point. In terms of different structures being there in different jurisdictions, how do we deal with that problem? But that's not unique. I mean, all standard setters have that problem, and generally we have a high-level guidance, principle-based guidance. But I think it would be useful to take a look at how IESCO has handled this area in terms of dealing with the principles on collective investment schemes. Have they gone into the particular structure-wise recommendations, or it is at a broader level? I think that may help us in approaching the problem. So just a suggestion.
Thank you very much, Amajit. John, anything from your side? On your side? Okay, so in the interest of time, we are getting really late, and there is still a substantial part of the presentation to go through. So I'm going to give you the floor back, Jean, I think. And I would suggest that you move go through the slides quickly, and then we will collect feedback to see if we can speed up this. Thank you.
Okay, thank you, Gabriella. So the next part is part 4 of the consultation paper, which is addressing the application of the code to investment schemes when they use the services of unrelated third parties. Obviously taking comments on board from earlier about the terminology and the use of the terminology, and we'll have a discussion about that with the work stream. And obviously this is the main focus of the consultation paper, is when the third party is unrelated to the actual scheme itself. So just, revisiting the flow chart from earlier. So if the entity is, this is where we're trying to establish some sort of a threshold in terms of when we consider that it might be problematic. So it's where they're responsible for the decision-making and operation of the scheme, and they can materially affect the performance of the scheme. So as per the previous section that we discussed, if it doesn't meet that threshold, first of all, then it's not really where we don't think that there would be considerable threats that are created as such. So that's that box in the middle at the top. And then obviously, if it is a related entity, as we've described, the code would apply as normal, and Part 4A would apply around the evaluation of auditor independence from the related entity. But it's where, the third party is not related, and that's where we think there might be that risk that the independence is not adequately assessed with relation to with the audit client. And as mentioned, so the control and significant influence is what determines that related entity aspect. And we have heard some concerns from some stakeholders and from the workstream ourselves. We think there is some concern that maybe those terms or those concepts are not working appropriately with respect of unrelated third parties to an investment scheme. And that's why we've developed this threshold. Because we've seen, there's been scenarios that we've seen where third parties to an investment scheme, so they don't technically control or have significant influence under those definitions. But they have, I guess, a qualitative control over the scheme, which is what is reflected in the criteria in the blue box. So where they're responsible for decision making or can materially affect the scheme. As we've already discussed, generally or typically the investment scheme itself does not have employees, and so therefore they have to rely on the third parties to carry out vital functions in the scheme. We obviously have seen that there are instances where they might be undertaking mechanical or automated services, like such as administrative tasks or bookkeeping, that sort of thing. And sometimes this might be that the third party is actually delegating to another party, and they're undertaking those more sort of mechanical type operations. So they're the things we don't consider that there's significant concerns and would be addressed appropriately with the code. But where they do have the significant responsibilities related to the schemes, it might be relating to the scheme's policies and operations, so such as making investment decisions, managing financial records or financial controls. It could be managing the overarching strategy or selecting other service providers. Where they are unrelated and they're undertaking those types of responsibilities, that's where we consider that potential gap to be, and that's where we want to hear stakeholders' views on whether they're responsible in that situation and where they can materially affect the performance, and just to determine, like we've mentioned, whether that gap is perceived or whether it is real, and to get stakeholders' views on that particular issue. So if we just move back to the slide from before, I won't go into any detail here, but if obviously when there is an unrelated third party and it's not captured as part of the audit client under R400.27, it means Part 4A of the code does not apply to that unrelated party. It still applies to the audit client, obviously, but in relation to the unrelated third party, Part 4A doesn't apply, so it doesn't have that guidance that we've spoken about around how to apply the conceptual framework specifically in all the provisions in Part 4A. There's not those prohibitions or those provisions specifically around management, or where an individual might be able to impact the financial statements that are subject to the audit opinion. But again, at the bottom, you can see that, yes, the conceptual framework does still apply, and the fundamental principles and independence. And there is obviously the guidance through the conceptual framework. But again, that's where we want to understand whether that is working appropriately and being consistently applied. So this last slide here, again, this is just sort of representing the same thing, that if it's unrelated to the investment scheme, you've got to comply the conceptual framework to independence, to relevant interests, relationships, circumstances between the auditor and that unrelated third party. And it may well be that the auditor does arrive at the same independence conclusions as those that are guided through the specific provisions in Part 4A. However, the conceptual framework does allow for different interpretations in these types of audit engagements. And that's what we're trying to assess, is whether they are being applied consistently, whether the same sort of approaches are being considered by the firms and arriving at the same decisions, or whether there is a potential gap. And that's where we want to get stakeholders' views on the specific whether the specific independence provisions for these scenarios, whether it would increase consistency and would serve the public interest. So again, we developed a series of questions, and we'd like to get your feedback on those now. But obviously, I think we've already received, we've received advanced comments, but a lot of the comments around today was that perhaps question 4 in particular, that should be maybe around the actual application of the conceptual framework and whether it's being applied appropriately in the public interest. But then also maybe there's a question for firms specifically about how they're applying the conceptual framework in these particular scenarios. We also think that there's probably an opportunity to ask a question at the end of these questions around potential unintended consequences in terms of other types of structures, which I think goes to Christelle's comment earlier on this morning. Just to ask that if there were, revisions to the code, would it impact other types of structures and those sorts of things? So, but I'll pause there and see if there's any comments on the particular questions in addition to what's already been brought up today about potential other questions that we should be asking. So there's 3 and 4, and then there was 5 and 6, which are set out in the consultation paper.
Thank you very much, John. Christelle, please.
Yeah, I just have one question on the number 3. What conclusion will you draw from the proportion of investment schemes that it would apply to? Because it's going to be a local answer in an ocean, so and it might trigger some work for them. So is it useful to ask for that? Does it have an influence on the conclusion you would draw on this particular situation, or on a broad situation? If not, I would suggest not to ask the question.
The reason we're asking the question is to try and ascertain how big of a problem's not the right word, but how many or how often is it that there is an unrelated third party that's carrying out these, where they're responsible for, the operation, decision making, all those things, whether they are meeting that criteria, but they're not considered a related party. So we're trying to determine how how broad it is across the
Then I would
jurisdiction.
suggest that you ask the question, what is the appreciation of the person or the organization answering to you? Do they feel it is a common issue, an important issue for them or not, and based on what criteria? And then you have, yeah, it's more of a, it's not you are asking a sort of triggering proportion that allows you to conclude, and I think it allows you not. So it's better to ask the question that you raise. Is it an important issue? And based on what criteria is it an important? Maybe they will answer it's because it's 90% of our situations address face the problem, or they are going to say it's because our regulation is asking this, and so it's almost always the situation. You see what I mean?
Okay, thank you, Christelle. Sadia, please.
So for some of these questions, I was wondering if it applies to all stakeholders, because some stakeholders wouldn't be answering on behalf of their jurisdiction, it will be on behalf of their experience. And you might want to, and then that second part of the third question, what proportion of investment schemes would this apply to? That might be something that a lot of stakeholders wouldn't be able to answer. So you might want to think on these questions, which ones you sift through and you really want answers from the auditors, or you want answers from national standard setters and PAOs. So it will help you with the phrasing of these questions.
Thank you, Sadia. No one else? Rich, please.
Thank you. Very, very briefly. The question 3 references paragraph 30, and my question or comment on paragraph 30 is the use of the word material, because I think you could create confusion among respondents, because some will think about that in terms of materiality as a professional accountant thinks about that, which can be a very low percentage and could fluctuate period to period based on performance of other aspects of the plan. I'm thinking about multiple advisors involved. So I think you might want to have a more explicit explanation of what you're after, which I think is what you're after is people who really substantively impact the economics or a substantial portion of the economics of the plan. Thanks.
Thank you, Rich. Hector, please.
Thank you, Chair. This is more a question for the group. If we go to question 5 on the first letter, you ask, do you believe it's in the public interest to apply for A? And if the answer is yes, then in B, you ask, what exceptions would you apply? That was sort of confusing what you are looking from stakeholders in there, because it seems like you want to carve out sections of Part 4A for these specific management companies or front managers. And I haven't seen the reasoning for that in the discussion we have had here. I think we were discussing, do we scope them in or out? And you're asking already here for exceptions. So I was sort of confused in whether we are running ahead of the discussion.
Thanks, Hector. The reason for that question, I mean, maybe it needs to be clarified more, but the reason for that is that so you might have a management company which might manage a whole like 100 funds, or it might be so the question is whether independence should be over the whole, over the whole fund, or whether it's just certain aspects, over the whole management company, or whether it's just certain aspects or certain relationships that are relevant, rather than having to like full independence across the whole entity, which would be obviously quite onerous, if that makes sense. So it's the question is whether it needs to be, if it was 4A to apply, should it be limited to certain aspects or relationships, interests, that sort of thing.
Just to understand, that means if BlackRock is managing the scheme, you don't want to analyze independence of everything that BlackRock does.
We want to get views on whether it should be over the whole entity, for example, or whether it's really should be more limited. That was the purpose behind the question. Yeah.
Okay, thank you.
Thank you, John.
So just as an example, so when you look at that exception in 600.27, it's sort of saying that you don't. Sorry, you can, for example, you can provide certain non-assured services to that entity as long as it doesn't impact what you're auditing, what financial statements you're auditing, and that there's no self-review threat. You're not assuming management responsibility with respect to the fund. So just as an example, that's sort of what we were trying to ascertain.
Thank you, John. Tomoyo, please.
Thank you, Chair. So I totally understand what we are talking here. We are talking about auditors' independence. But as you mentioned, I think we should more understand the reality. And we are talking like for this auditor independence or the CIB, we are talking on the basis that we might not be doing, the auditor of the CIB independence review is, we do less than the auditor of a traditional company. But I think so the reason why I raised the example of those disclosure of those fund audit in the management company, or whether the auditor of the management company and the CIV is the same or not. So maybe there are additional things that the auditor of the CIV might consider. So the question to part question 5, I think for just applying 4A to the auditor of the CIV might not be sufficient, or maybe need to ask a different question. And so to get those expected answers from the people that will respond, I think we need to more change the angle of the question, or review whether we are making the questions on the correct basis. Hope you get it. Or
Yes, Tomoyo. I think that the working group will see what they can do with those suggestions. And actually, and I'm sorry, I know that we are running late, but just one comment from my side, and I had already mentioned that it's important that the questions, and I think it's your point as well, are made in a way that we can get responses not only from the profession, which is the case when you start going into the details of the code and etc., but in ways that we can get, for instance, responses from the investment funds, who are not that familiar with the existing provisions and the technical provisions, but may have an idea about what is needed, what can be a challenge, what can be a problem, and etc. So I think it's more general comment about how the questions are made in terms of making sure that we get feedback from a diverse, wide range of stakeholders, and not only those who understand the code, the profession, and so that understand that this works this way and that way. I don't know if this somehow responds to your comment, Tomoyo, but that's...
Thank you, Gabriela. Yes, thank you for changing my comments to...
No, I'm not trying to change. I'm trying to respond.
But just interpret what I said. So thank you. So that's I think I want to say. Thank you.
Thank you, Tomoyo. David, please.
Thank you, Chair. So, John, just back to what Hector said and your clarification. I didn't read that either, your clarification in the question. So I think it'd be really helpful to be that direct. Is it about the fund or is it about the entity managing a portfolio of funds? So just be direct in the question, because I think you'll get more fruitful answers from that perspective as well. I think that's maybe an example of clarity that would be really helpful.
Okay, thank you. Rania, please.
Thank you. So first, I have 2 points. The first one with regards to questions 5 and 6. So in question 6, when you ask, do you agree that this is an appropriate threshold? So isn't this basically what we're asking about in question 5B? I mean, are there exceptions? Because in question 6, you ask, I mean, do you agree that the items, what was described in paragraph 30, is an appropriate threshold, or are there other relevant considerations? Aren't the other relevant considerations really alluding to the exceptions when the provisions or what was described in item 30 is not sufficient to require application?
So as mentioned, that paragraph 30 is setting out the threshold around responsible decision-making, operation of the scheme, or material affects the performance of the scheme. So we're just asking the question that have we got that threshold right? So for example, if you go to Rich's point where he talked about materiality, and that might create some not confusion, but different interpretations of what that means. So that's what we're trying to ascertain, is that have we got, like, and then Rich made a suggestion that maybe it's more substantively about the economic. So that was the point of the question, is to clarify whether that seems to be the right level or threshold. Yeah.
No, I totally agree with the question and what you're trying to accomplish through those questions. My point is, it seems to me like I'm trying to read this as, I mean, someone who wants to respond as a potential respondent, and my point is that you're asking me if this is a sufficient enough threshold or other considerations. In my mind, basically, you're asking about the exceptions, or I mean, if there are other considerations, then this in and of itself is not a sufficient threshold, and there are other considerations because there might be exceptions. So in my mind, question 5B and the first part, at least, of question 6 can be combined. It seems as though they are speaking to the same issue, at least the first part of question 6. So just something for your consideration, because I mean, the questions can be sharpened a bit. That's my first point. My second point is perhaps you may want to consider reordering questions 4, 5, and 6, because if you go back to your flow chart, the slide 15, so the first question is apply part 4A, and then it moves on to say outlines how to apply the conceptual framework to maintain independence. But then question 4 talks about, you know, the application of the framework, the conceptual framework, and then it talks about the part applying part 4A. So just to follow the same, you know, sequence of ideas, I put in question 4 after questions 5 and 6. Just a comment. Thank you.
Okay, we'll consider that as well, because I think from the discussion as well, there were additional questions we need to ask around the application of the conceptual framework, et cetera, and whether there's needs to be guidance or additional clarification. So I think the questions will, shift around a bit. Thank you.
Thank you very much. So if you agree, I'm going to take the rest of the questions together, and then you respond, okay, John, because we are really getting late. Amajit, please.
So very quickly, this is regarding question 3, 4, and 5. I think Rich probably already covered it, but just in case it adds any value. So it talks about unrelated parties having responsibilities similar to those in paragraph 30 for investment schemes. So this phrase runs commonly across 3 questions. And paragraph 30, I was checking, refers to 2 kinds of responsibilities, one relating to mechanical and automated services, and one which have significant responsibilities. So those are specific parts of para 30. So my advice would be if you can refer to specific responsibility which we want to check, rather than just saying commonly similar to those in paragraph 30. That's very broad reference. So let's make it maybe a little more specific reference. That would be helpful.
Thank you. Amajit, Paul, please.
Thank you. Maybe. I think if anything, just building on the comments that were made on the need to relook at how we're phrasing and structuring the questions to make sure they're drawing non-PA responses to some of these things, and just raising that question in terms of whether there need to be almost preliminary scoping questions around what are we trying to get to the core of. I think it's been said many times, and make sure that we have multiple views on the fundamental before go into the detail of the application of particular paragraphs and code elements to make sure people comment in terms of the direction we're trying to unpack. Thank you.
Thank you, Paul. John, any reaction? No. So Ken, finally.
Yes, I'll be quick, really. It's just in relation to question 5, and I just wondered if one possibility to make that question more specific is really to refer to the issue of fiduciary duty, which is a critical concept when it comes to the world of collective investment vehicles. Because at the end of the day, there has to be fund management company, as you've indicated, to more in your case, one asset management company that has a legal or regulatory duty to basically put the investors' interests first. And if that is a sufficient guardrail in practice, could that be an exception to essentially the independence, imposing independence requirements relative to audits of those collective investment vehicles? That could be in question. I'm not saying that should be the answer, but could that be a consideration that in circumstances where there are fiduciary responsibilities under law regulation related to those third parties, essentially would those fiduciary duties obviate the need for the code to step in and impose independence requirements with respect to those third parties? Just for consideration.
Okay, Ken, thank you very much. I don't see anyone else wanting to speak, and I will leave my own possible considerations to the end and we'll give the floor to Jean now for the last part of the presentation. Jean, the floor is yours.
Thanks, Chair. And I know I'm standing between the board and lunch, so I will definitely run quickly through the second lot. I'll just hand over to Linda just to end off. So the part that I'll be discussing is question 7, 8 to 9 that deals with the jurisdictional responses. And we have spoken at length of this at previous meetings, as well as how specific jurisdictions has responded in relation to CIVs as well as pension funds. So with the section, we kind of cover the broad strokes that we've seen through our analysis. That's on the slide. It's in the paper. I'm not going to run through that, but the next 2 gives some a little bit additional flavor of identifying those jurisdictions. Amajit mentioned where, and in his jurisdiction, they have the auditor needs to be independent or certain characteristics around the auditor, who can be the auditor. We have codes, the local code that has been amended with the related entity definition that has been scoping in certain parties of CIVs as well as those of pension funds. In laws and regulations, some third parties, even like the sponsor or the management company, is seen as having control or being seen part of the audit client. So these are the things that we would like to actually get additional information from our respondents, as well as how they've dealt this within their jurisdictions, that would help us inform and seeing where is this gap, or is this really a gap? Is there something that needs to be addressed as well? So before going into the actual questions, is part of the terms of reference, the project team was tasked to look at investment company complexes. We have given this feedback as well as previously. I'm not going to go in detail. We spoke at September. John explained this. We are recognizing that this is a jurisdictional response, specifically of how it's being dealt with mutual funds. And we use this as an example to indicate how jurisdictions has responded to collective investment vehicles. So the intention where it's referred to in the paper is not to say this is separately, it's not CIVs, pension funds, and ICCs. It's kind of scoping it in under the CIV as such. So just going to the three questions. So the first question, question 7, deals with the amendments to the code in relation to investment schemes, so both CIVs and pension funds. Question 8 deals with those where it's actually laws or regulations that has been stipulated, which is not the ethics code, but rather that's written into law or regulations within that specific jurisdiction. And question 9 asks the respondents, based on the different responses by jurisdictions, is there maybe something that they would recommend or that they seem being the appropriate response? And this kind of gives feedback to the project team of how potentially we could deal with this issue. I'm going to stop here and just ask if there's any comments or questions on part 5.
Thank you, Jen. Bravo for the speed. Any questions or comments on this last part? Sungnam, please.
Thank you for. From the perspective of the respondents, I believe that there could be some confusion in terms of the code, the term code. We in question 7, 8, 9, we use the code consistently, but each of the questions refers to different code, I believe. So the question 7 would be code as adopted by jurisdiction. 8 would be local code. 9 will be IESBA code. So I believe this issue needs to be revisited. Thank you.
I'll leave it, Sunam, as a recommendation for the future, not only in this project and document, but in many ones, when actually I many times see the references to the code in places where not all the respondents at all the stakeholders with whom we are speaking necessarily know which code. So I think that is being more concrete and clear, it's helpful. So this is, okay, David, I was going to mention you, but I see that you want to speak.
Thank you. I'm not sure why, but maybe just one point, because I agree with Sunam completely. I think the code, when we talk about the IESBA code, that was exactly what went through my mind, is which code are we talking about? And then thinking about how that's established will also determine how many potential respondents we get. And then whether or not there's a way that we can include jurisdictions that are not applying the code, and perhaps asking why. I mean, I know this is a broader question, but maybe it would be helpful as well to find out which jurisdictions could potentially adopt a code and what are the barriers to them adopting it, and perhaps using this project as a vehicle to start getting some of that early feedback. I don't know if that's helpful, but that's exactly what went through my mind as well.
Thank you, David. Sunam, do you still want to speak? No, thank you. So, Linda?
So yeah, just here to wrap it up, closing and next steps. We're working to finalize and issue the consultation paper. So we will take your comments back and work on them feverishly today and tomorrow, getting you the revised consultation paper sometime tomorrow, hopefully earlier rather than later. On Wednesday, we will bring the amended version to you and seek approval. And after cleanup, we'll send the consultation paper out, hopefully, like I said, the end of March or the 1st of April. And after receiving comments, we will bring this back to the board in September with further information. I think that's about it for now. So thank you, Chair.
Thank you very much, Linda, and project team. This was a very good discussion. Let me try just to very quickly summarize a few things here. Hopefully trying to help the project team, but also ourselves. So on top, or additionally to what we have not concluded, but what were the main topics addressed in the first part of this discussion, which was this burning topic of the conceptual framework being enough or not enough, needing some refinements or something in addition or not, which is something that many members mentioned. Also, the term, the concept or the term of unrelated entities, which may create some confusion and bias some of the responses that we may have. This was from the first part of the discussion. Then there was a request across the discussion to include probably a little bit more information or flavor about how these entities work, about how the decisions are made, about the structures and etc., which may help clarify, but also refine or make the angle of the discussion more clear, that it's about the audit independence and how the choices and decisions are made from that angle, not that much from, or not at all, from the angle of the investment fund, which is subject to different regulations and different things that are not in our scope. The mention to the fiduciary duty, which is important, and it's important to introduce another element that may or not, but mitigate the need for additional standards or whatever in terms of reinforcing or ensuring the independence of the auditor. There was a request for clarification, or more than one, clarification, simplification, and that's in respect to the way the document, the consultation document is draft, but also with respect to the questions. And here again, it's important that we reach out to the right audience, and the right audience is necessarily a diverse audience. If we end up with questions, with responses only from the profession, only from those who understand the code, the part 4A, all the related parties, etc., in a very technical way, we will not get where we need to go, because this is also a little bit about perceptions or about the idea of risks involving this topic. And again, there was not that much that discussion, but it came to the table, the idea, but is there a gap? Is there a real gap? Is there a perceived gap? And some say, no, there is no perceived gap, or there may be no perceived gap. What if, and this is my question, there would be a real gap which is not perceived? And having worked in the capital markets, I can assume that this may be one of the questions, one of a reality or not, but that those kind of questions about, at the end, ultimately the public interest of this project, I think it's gonna be important to get feedback from different stakeholders about how important this is, what are the perceptions about risks involved in the independence of the audit of the CIVs, and the impacts, the economic impacts and social impacts and etc. that this may have. And finally, and I think that there was a request to refine the questions to make them more clear and more prone to receive input from a broader range of stakeholders. I don't know if there is anything missing. I mean, of course, there were a lot of comments, and thank you very much for this very good discussion. I think it was a very good kickoff for this meeting. The project team will have a nice time processing all these comments. Of course, we will all be trying to help. And of course, since we are working in a different model, the board members will be welcome to help, namely when you say, and I was thinking, for instance, Nancy, can we put this question in a different way? If you have suggestions, please do help the project team. Doesn't mean that everything will necessarily be taken on board, but it can be helpful to have some concrete suggestions. So I'll stop here. We are 20 minutes late for lunch, so we will reconvene. And here I'll ask for Ken's guidance. Maybe 1:30.
Yeah, the lunch is scheduled for 1:30.
But we have the pictures, we have the
yes,
photos.
we do.
Yeah.
So I'd ask maybe we'll reconvene at 1:40. 1:40 Eastern time.
Okay, 1:40, 40 minutes past the hour for those attending virtually. Thank you. So welcome back. Thank you very much for being on time. I hope that you had a good lunch and recovered some energy after the morning very good discussion on CIVs for this second topic in our substantial topic on our agenda, which is on adoption and implementation. Just as a recalling how this started. This started with an idea that we needed to care more about the adoption and implementation of the IESBA standards, that as a standard setter, we cannot just set the standards and move away from their adoption, implementation, and not caring about what's happening with them. Not only we need to be providing support, but we need to understand what possible issues, what possible impacts, and etc. the standards are making. So I don't think that anyone here now has doubts about the relevance of this working group that we set up. Of course, we are not the only ones taking care of adoption and implementation. This is not a job only for us. There are many others involved, namely IFAC, the most obvious one, who has responsibilities and does a good job on that, mostly with the professional organizations, but also all other stakeholders with whom we are engaging to leverage our own efforts, being a very small organization. So Amajit has been chairing this group. Thank you for your availability, knowing that you are a very busy person in your professional life. But the group has been doing a very good job, and I'm going to give you the floor immediately for the updates that you want to give to the board and the other topics that we need to discuss. Amajit, the floor is yours.
Thank you, Chair. We have a short presentation. So while we get on to that presentation, I think we made good progress, if I can say, and forgive the conflict of interest. I chair the group, so I will probably call it good progress, but it's for everyone to judge. So I believe we've done well since the last board meeting. It's not been much time. And while we'll share the details, I must add that it is the beginning of a long road. And it may sound rhetorical, but we have an exciting journey ahead of us, and a journey which seems, to my mind, a little more challenging in today's times, but it promises to be rewarding ultimately, and that's what should drive us all on this very ambitious project. To give you some flavor of what we've done since over the last roughly 2.5 months, we met twice. First meeting we had on January 15 and second on February 12. This is the meeting of the working group. If I can pick one important item out of the list, we are focusing a lot on identification and mapping of jurisdictions, which are adopting either IESBA or they have their own local sustainability reporting framework. That is in terms of the TOR that the board had a look at earlier when we talked about how to prioritize jurisdictions. So in our working group meeting, we spent considerable time on identification of particular jurisdictions, and we have those details. A lot of work there done by both John and Elaine, and also Deepa gave a lot of inputs. Second area which we are focusing on is, again, it's just a tool, but I think it's a useful tool, the stakeholder engagement map, which will give us a handle in terms of finding our way through this whole monitoring of implementation exercise. Again, this has been populated, and I believe we have some 36 stakeholders identified already, and we'll give you those details, how they spread across various geographies and how they spread across various stakeholders. And we are, again, I should say thanks to the inputs given by all working group members who've contributed to filling up this stakeholder engagement map. But this is a continuous exercise, and we'll seek support from all board members. We also spend time, and we probably need greater clarity, if I can say, in terms of how do we engage with IFAC? How do we leverage their work in terms of outreach, in terms of pushing implementation, and also how do we be on the same page in terms of our understanding of what we treat as adoption, what we treat as implementation, and so on. So we need to be on the common page with them. But that again is a continuous exercise. We've also discussed on the materials to be rolled out, and also, of course, joint launch was very helpful. That has given a fillip. I mean, we have no doubts now, and we should just march on this journey. So I'll just probably pause with this high level touching of various points, but may I request John to take us through the details, please?
Yeah, thank you very much, Majid, for the introductory remarks. And so the agenda paper 3A that we provided as part of the board meeting materials, that sets out the ANI Working Group's updated action plan, and it provides some of an overview of the key ANI activities, including some that have been completed and new activities that have been added to the action plan that was presented at the December board meeting. So we're sort of considering that as like a rolling document to be able to update the board as things are actioned and what's been added and what's been completed, that sort of aspect. So during today's presentation, we're mainly going to focus on highlight some of the key activities that have been undertaken since the last board meeting, and also some new activities that have commenced. As Amarjeet mentioned, there was the joint launch of the IESBA Sustainability and Expert Standards, and also the IEESB's ISA 5000, and this was on 27th of January. It was very successful, and I'm sure comms will cover later on in this board meeting some of the aspects around the outreach and all of those aspects, but yeah, very, very successful event. So we obviously issued 3 sets of standards. So there was the IESA, there was also sustainability reporting revisions to the extant code, and then also the provisions relating to using the work of an external expert. At the same time, we released a series of implementation support materials as part of the launch. So there was basis for conclusions for the IESA and sustainability reporting, and then a separate one for the expert standards. There was a joint fact sheet produced between the IESBA and the IEESB. So kind of a iffier fact sheet in a sense, because it covered both boards. And it set out how the IESBA's package of standards and how they interrelate with ISA 5000, and also setting out the trilogy of standards and the importance of that, which is on the right-hand side of the slide there, around the ecosystem of sustainability reporting and assurance, consisting of the reporting, assurance and ethics standards. So that, yeah, global ecosystem. There were also separate fact sheets that were issued for the IESA for sustainability reporting and experts. And they aim to provide a higher level sort of overview of the content and key characteristics of the standards, why they were developed, and what the impacts are anticipated to be, and who will potentially be impacted by them. There were also technical overviews that were issued on the IESA and experts, which walked stakeholders through the standards and some of the key provisions that are relevant. And in relation to the IESA one, it kind of tried to highlight to professional accountants, for example, so things that are incremental or things that are new for them from what's in the audit, ethics and independent standards for audit, but also for non-PAs to highlight some key aspects and issues for them to be aware of. So the updated action plan includes other plan materials. I don't intend to go through these, but obviously if there's any questions on those as we go through the presentation or at the end of the presentation, please feel free to ask about those. So the next thing that happened was we had a series of global webinars, and they were held during late February and early March. The aim was to provide educational and training guidance on technical matters in the standards, and to address some of the how and the why on selected topics. We actually had over 1,500 people attend a series of webinars, so pretty good turnout for those. We held each webinar on 2 separate occasions so as to cover as many global time zones as possible, so as to ensure that we had appropriate coverage. With the IESA and sustainability reporting, we held 3 separate webinars. And this was done so as to break up the content to be more accessible and enabled stakeholders to determine which ones they wanted to attend based on their background, roles and information needs. So the first webinar for sustainability provided an overview of the IESBA's mission regarding sustainability, and then it had a section that was specific on the sustainability reporting revisions to the code. The first of these webinars was presented by Christelle and myself, and then the second one the following week, which was Rich and Laura. This was actually the one that was attended the most, so there was 515 people attending on the day. We asked about what the stakeholder groups that the attendees belong to, which is provided up on the screen there. The usual or expected stakeholders attended from the professional accounting bodies and the firms, etc. And we did ask about attendance from those from non-PA assurance providers and also preparers as well. And there were some that attended, but the numbers were relatively low. Excuse me. The sustainability 2, so this provided an overview of the IESA and some of the key topics in the standards. Both of these presentations were made by Sylvia and Laura, and they also had good attendance, so 378 overall, and a similar spread of attendees, again, some from outside the profession, outside the accounting profession for assurance providers and preparers. The third webinar on sustainability that provided a deep dive into the international independent standards in the IESA. These presentations were slightly longer to provide more time for questions and answer session, and there was a lot of questions and answers during these sessions. The first one was done by Mark and Sylvia. The following one was done by Chana and Sylvia. Again, excuse me, again, good attendance, 377 people attended these webinars, and again, a similar spread of stakeholder groups. And the final webinars, this was actually on the, using the work of an external expert standard, provided an overview of the standard, some of the key provisions and aspects within that. And these were presented by the task force members over the 2 different webinars. And again, quite high attendance. There was 306 people attending on the day, and similar spread. So the webinars and the content, like the slides, will be, I'm not sure if they're up yet, but they will be put up on the IESBA website for other stakeholders to visit and to watch in their due course. So I'm now going to pass over to Elaine. She's just going to discuss some of the additional guidance material that's been added to the action plan, some information about collaboration with IFAC and IESB, and also around the prioritisation of jurisdictions.
Thank you, John. So this is by no means everything that we have planned, but coming up shortly, we are going to have the first volume of FAQs planned for early April prior to the IFAC summit. This first volume will focus on some of the expedited materials related to sections 5405 for group audits, as well as 5406 for use of the work of another practitioner. After workstream 1 reviews, it is with workstream 1 right now, we anticipate having a fatal flaw review and have that publication again prior to the IFAC summit. We do anticipate that other volumes to be issued later on in Q2, and those will relate to the other ethics and independence matters within the IESA, as well as sustainability reporting. 2 other items that we have planned for Q2 include a summary of prohibitions in the IESA that will be applicable with respect to the SAEs of PIEs. So this will be similar to what was performed previously but we will be looking specifically in looking at prohibitions related to the IESA. The third item is we really want to make sure that it's clear we're going to be looking at the value proposition of the standards. So one other document that we're working on preparing is materials for investors and those charged with governance related to the impacts and benefits of the IESA and the expert standards. We also wanted to highlight the spirit of collaboration that we have been maintaining with the IFAC and the IAASB. We want to reassure the board that we are working with both very closely, and I do think that we have made very good strides. And we wanted to include a few highlights here of the collaboration. So one of the things that we've done with IFAC, we do have regular meetings with them, and we have been working with them to figure out how we may better direct opportunities, leveraging their existing relationships with certain professional accountancy organizations, and just making sure that this is an effective collaboration. We've also been discussing with them their updates to the adoption definitions, including, whether a jurisdiction has partially adopted or fully adopted, and they're looking to update that to the 2018 version of the code. We've also had numerous discussions around IFAC's state of play. For those of you that recall, that was a very in-depth document that looked jurisdiction by jurisdiction around sustainability. And we've had discussions about how we can leverage that document or perhaps a future version of that document and perhaps direct or have some input into the next version of that state of play. For IAASB, we also have regular communications with them as well. As proven by the successful joint launch, we are working very diligently on creating additional joint materials and discussing additional sustainability projects and coordinating our activities with them as well. We've also kind of had a working group that meets about monthly on adoption and implementation so that we can be sure that we are aligned with IAASB as well. And now to our jurisdictional prioritization. These are some of the recommendations that have come from the working group. As Amarjeet mentioned, we took a look at a number of various factors, including the economic size, as well as the adoption status. And looking at those factors, we came up with the top 15 that had sort of the largest GDP based on World Bank public information. We also looked at other items such as market capitalization and IFAC state of play. So if we are looking here, why we chose 15 as opposed to 20, we could use some input from the board if they believe, our first bucket should include more jurisdictions. But we decided to look at sort of the biggest bang for our buck, the largest jurisdictions that had indications of adoption. What we also looked at as well, that wasn't part of the final determination, but we also considered the ESG investment, and we noticed that that did not significantly change the categorizations of the prioritizations in countries. So that was sort of our gut check and some of the information that we also took a look at to make sure that there wasn't anything that we were missing in our prioritization. And so with that, the working group does propose that we focus on that group number 1. And then following along, that category 4, I just wanted to note that we had some indicators of size there, but those 2 countries didn't have indicators of adoption. And so that's why they would be put last on the list. And I'm happy to take any questions here, but the prioritization was done by looking at data from publicly available sources. And then now I'm going to pass it on to Amarjeet.
Thank you. So not much to say on this slide. Essentially, we already covered about this trilogy of standards. Idea is that how do we coordinate with ISSB and IEESB? I believe already interaction with IEESB is on. We had a good call with IEESB in October last year. We've been in touch with them over email, and we are likely to have a meeting or a call in March. That's what I understand. I think that would be very useful. Idea is to present it as a package where you have both reporting, assurance, and ethical standards. So that is why all the three agencies need to work together. I mentioned about this, the stakeholder engagement map. So here is further breakup of what we've done so far. It is mainly in terms of identifying who could be our potential initial stakeholders. So if you see on the right-hand side, we have the region-wise breakup. Total 36 shared stakeholders have been identified. And on the left-hand side, we have the breakup as per the stakeholder category. So professional accountancy organizations are at the top. And as I said, this map is more of a tool to help us identify and take those discussions forward with the relevant jurisdictions. So now we'll open up the floor for views, comments, suggestions on whatever we've done so far, what our approach is, what our activities have been, and any other thoughts and suggestions which the board members may have, and any feedback which you want to provide. I'll just pause with that. Thank you.
Thank you very much, Amarjeet, John, Elaine, for the presentation. A very rich one, not only as a presentation, but reflecting the work that you have been doing and that everyone has been doing. Thinking, for instance, about the webinars that were already organized and so successfully. This is really a collective effort, but thank you for driving this and to keeping the focus on having ensuring a structured approach to adoption and implementation. I would have myself one or two questions, but I'll leave it for the end. And so I'm opening the floor for questions or comments that board members may have. And I see David to start.
Thank you, Chair. So just a little bit of color to add to what Amarjeet said before on the previous slide. So where you see, for example, CFO community and companies, it's probably important to understand that behind that one organization like the International CFO Alliance, for example, or DFCG, there are thousands of CFOs that we can potentially engage. So just to give you some color and context, don't think the number means that it's only four organizations. It's not, it's actually what's behind it that's important. I just want to share that color so there's a bit more context.
Thank you, David. Obishuku, please.
Thank you. Okay, by the side, I understand the prioritization. I appreciate the standard. It's very timely and it's a lot of great work. I just have a few suggestions. I don't know, but that's what came to my mind. And I just want to share in respect of implementation, driving implementation and adoption. So I was wondering if the IEESB and IESBA, if we can come together and develop something like a diploma or a qualification, like an exam that people can subscribe to, write based on the standards to help develop capacity. Because if I am drawing from the examples of how ISSB tried to drive capacity, given that sustainability reporting was a very new area. There's a qualification, a qualification they have, and they call is it FSA, something like that. So people write the exams just to be able to understand the standards and to be able to practice it. So given that ethics is so key to sustainability, I feel that that's an opportunity that can help to drive it, both for the PAs and non-PAs, if there's something like that that can be done, either with collaboration with like GRI. They also have their exams. We can IESBA can reach out to we can reach out to them and ask them to include ethics as one of the models. So that's going to put the standard in the face of the market, and people will come to. I believe it's going to drive adoption and implementation and even awareness of the standards. Given how fundamental ethics is to sustainability, especially in regard to assurance, it's a whole new practice. So I believe there's need for more than webinars. I think if it's something that could be done, something like that should also be added to drive adoption. Then on prioritization, I was wondering why Nigeria is not in the second block, but because we are among the first people that adopted the FIRS Sustainability Disclosure Standards S1 and S2, and even though maybe our state of preparedness is not as strong as some others, but we already have a roadmap that for voluntary adoption from 2024 to 2027 for voluntary, and from 2028 to mandatory. So I believe that if the outreach activities are also pushed to Nigeria is included on time during the voluntary space, it will help build capacity so that when it's not mandatory for everybody to comply, the foundation or what should be done is already known. And that's just my thought. Thank you.
Thank you very much, Obichukwu. I think this is a very good idea. The possibility of putting something similar in place on the next few times, it's probably challenging, given that we don't have all the full capacity of making those decisions, and we will need to have the engagement with the others, right? But we would not put it aside, and it's important that we keep being creative and think about thinking a little bit out of the box and thinking how to do things in a different way than the ways we have been doing now. For sure, nobody disagrees that this is a very key topic, ethics and ethics in sustainability, and that training, capacity building, etc., is absolutely fundamental. That's why also this group is working on that. We are trying to use other organizations and other entities to leverage this capacity building. But of course, we can always, we should always consider other possibilities. Now we can have an offline conversation about that possibility, but we will surely keep it under analysis. I don't know if Ken, with all his experience about these things, want to add anything, but if not, thank you. We will for sure take that into consideration. And even if we cannot make a decision like this, because it's not only for us to make that decision, we will consider. Amajit, please.
So just to add to what you said, Gabriela, I think it's a good suggestion, if I can say. The first one in terms of considering how we can introduce some sort of a certification in the market. I know it may not be IESBA's mandate, or we may not even have the bandwidth for doing it. But if we can look at entering into some sort of collaboration, because I am aware, for example, in India, we have a National Institute of Securities Market, which is actually set up by SEBI. And we encourage all sorts of certifications for market intermediaries. So if we can keep this in our horizon somewhere, in terms of a possible tie-up with the local certification organization set up under local laws. It could be good to promote it would work in various ways. One is awareness building and capacity building both. So I think it needs some thinking. On the second point on the voluntary or mandatory adoption, so we are, I guess, in our strategy, looking at all shades. I mean, it will start from voluntary and it will take time, and it, depending on the state of play in each jurisdiction, it will evolve. So we leave it to the market forces.
Thank you, Amajit. Any other comments? Chana, please.
Thanks, Gabriela. If we go back to the country one, I just want to clarify a few things. So just on Australia, I want to clarify that what happened was the Auditing Standards Board had to issue the 5,000 equivalent. And because of that, they had to have ISI equivalent so that it can operate with 5,000. So they directly referred to the IESBA code. So that's what it's meant by adopting ISI, but it's not the national one because it's directly referring to the IESBA code. And last week at the APSP board meeting, the Australian board approved ISI as well as the experts ED for exposure. And so the plan is once the ethics board completes its process, then the auditing standard will be amended to refer back to the code as it is in Australia rather than the IESBA code. Looking at the countries, is it just purely the GDP that determine whether they were in bucket 1, 2, 3, or 4? Because I think that's not right. For example, if I look at Singapore and South Africa, they are probably more likely to adopt much faster than Russia or even the United States. So I think you need to sort of think about the capacity of how fast they're likely to adopt so that you would, put your resources and effort accordingly. So I don't think the country's GDP and market capitalization is the driving factor in the categorization.
Thank you, Chana. Great minds think alike. And this was exactly my question when I said that I had some questions. And it was exactly about how you use these two criteria, which are on the right side, which is the country's GDP and the signs that they might adopt the standards. And exactly like Chana, I look at column 1 and 2, and I see that we could make some movements from one side to the other, based mostly on the appetite for the adoption of the standards, because we really need to think if we want to use our resources in jurisdictions where the adoption of the standards is very unlikely. So that I would put it as a question, but it's exactly the same question.
If I can answer that, so you are right, absolutely. It is not so if you look at it in terms of a 2x2 matrix, if we just take two criteria, one the size and one the status of adoption. So the first bucket would be, we need to rehash this a little bit. So first category would be the countries which tick both the boxes together. It's not either or, both the boxes of GDP as well as indication of adoption. So that is the first bucket. And the second would be either or. So we will probably take status of adoption first, and then third, to my mind, a country whose GDP is not very high, but it is actually indicating it is Singapore, for example. So it is ahead on journey on sustainability disclosures compared to a country which is bigger. We should target that first. And the third would be just the GDP and no indication of adoption, but a significant GDP. So that's how, in my mind, I think we need to rehash this a bit.
Thank you, Amajit. I would also suggest, and before I give the floor to Vanya, who is second by alphabetic order, and I hope that you're going to say that you'll be the next ones adopting the IESA. So we'll go down in the column. But before that, I would just ask if this could be made a dynamic table, because we may not have all the information, and it may happen that some countries will move quickly with some signs. Let's say that Nigeria is in the last column, or the fourth or fifth column, but let's say that we have a sign that they may want to adopt a standard, but of course we'll need some help. So this should be dynamic. We should not probably take it as a rigid table.
You're absolutely right. So that's what we indicated in our strategy paper. Also, one more point and maybe we should discuss it offline about mention of Russia and Iran, but I think let's have that discussion separately.
Okay, thank you, Majid. Vanya.
Thank you, Gabriel. Just to give a view of what's happening in Brazil. We've been advocating to reporting sustainability as a three-pillar component. We need the reporting, we need the assurance, and we need the ethics. And so that's how we are dealing with the proposal. And IFRS S1 and S2 is already incorporated in our local regulation. It is now CBPS 01 and 2. And so the Securities Commission and the Central Bank has already adopted IFRS S1 and S2. And to be mandatory becoming in 2026, to be reporting in 2027. And as part of this process, we are organizing an event in June this year, where in the first day, we want all the standard setters together, so we can show the Brazilian market that they operate together in a coordinated way. And we need all the standards in order to have the level of transparency that is necessary. On the second day of the event, each standard setter will have their own program and will be facilitators. So IFRS Foundation will meet with preparers and regulators. IESB will meet with auditors and regulators and investors. And IESBA, I'm waiting to receive your program, what you want us to provide for you for this second day. But we understand that that's the effort in Brazil. During this event, we will have the launch of the first ever report in IFRS S1 and S2 by a very large Brazilian company that will be presenting using the possibility of anticipated uses of the standards. So that's what we are doing in Brazil. We are advocating for the necessity of having reporting, not only the private, but also the public sector, because IESBA is preparing their standards based on IFRS S2, and then the assurance and the ethical side as the pieces that will complement the view that we want.
Thank you very much, Vanya. And once again, thank you very much for all the efforts that you have been making to make those things happen. I know that you are very much behind that event, which is going to be a very good, big one. Maybe I missed something. I did not know that you were waiting for us to provide you with something, but surely we'll do it in 2 days or quicker. And I apologize for that. So thank you very much for this update. And it's good that you are the second in the column, and hope many expectations on what happens next. Paul, please.
Thank you. Maybe just going back to the approach to the kind of two categorizations, the GDP versus willingness and speed of adoption. Just a question as to how the ANI process will also start really supporting even those jurisdictions that are not large GDP jurisdictions, but are looking for reference points for if we want to move with speed and adoption, and we're looking at sustainability as a catalyst for economic growth opportunities, how can they be kind of front runners or front loaded to kind of give others a kind of reference point on what's possible? Thank you.
Yeah, so if
Thank
I
you, Paul.
can,
Amajit.
yeah, if I can respond. So I think, so that is in our scheme of things, in case the country is not large by the size of economy, but it should have some indication of adopting the disclosure standards first. And if it is on that road, then we can decide when to get in there. But if it is not there at all, I think to my mind, it may be premature to get there because the reward would not be commensurate with the effort that we'll have to put in.
Just absolute agreement with that. It is making sure that we're supporting those who are looking to move, even if they don't necessarily have the scale. That some jurisdictions are seeing sustainability as a new avenue for revenue generation. So how do we provide appropriate support? Full agreement, thanks.
Yeah, and just to add, I think what Gabriela already mentioned, we want to keep this list dynamic. It's not that it's very static, and depending upon the level of interest shown by the jurisdiction, we can always step in wherever required. So it doesn't really preclude us in that sense.
Yeah, I think that the level of interest or some signs that they may be willing to adopt, but also the perceived role of those countries or some countries in taking the others along. And I'm looking at Europe. I was thinking, for instance, Luxembourg, which already adopts the code, so it's a good sign. And apparently, they may be wanting to adopt the IESA. If that was the case, it's an important indicator. This is just an example. In Europe, because the dimension of the dynamism of the market is such that maybe others may want to follow, to go after. Not very probable in the current political and regulatory context, but that was their approach. So these kind of examples, I think that we should keep them under observation and see how we can adjust the focus depending on what makes the impact that it may make and the needs and etc. So no more comments? Thank you very much. This was a great presentation and reflecting great work done. And it's very good to see things moving and to see this very, very structured and strategic approach to this adoption and implementation responsibility rather than running in circles, going everywhere, duplicating efforts or using resources where they are not effective. This is really what we meant with the creation of this group. So I think that for now, the objectives are being completely achieved. And Amajit, I'm going to give you the floor back for the next part of the presentation. Or?
And I'll pass it on to John.
Okay. John?
And I'll pass it on to Sylvia. But actually, sorry, just before we do, if I just to finalising that last presentation, that we aim to reach out to the board members just to seek if you have any more views on particular stakeholders or within your own jurisdiction that we might be worthwhile for us to start to connect with, and who the right person might be, whether there's any sort of obstacles or things we should be aware of, those sort of aspects. So yeah, expect to hear from us soon in relation to that. So just wanted to point that out.
If I could just add to what John said, just to elaborate a little bit, this is important, so I can spend half a minute on this. So in this stakeholder engagement map, we are trying to identify within the jurisdictions who are the right agencies to be reached out to. And each jurisdiction has its own nuances. So I'll request all board members just to help us with their jurisdiction because they would know the best, at least in terms of identification of the right agency which has to be approached by us. So that would be very useful. Thank you.
Thank you, Amajit. Now, Amajit, John, Sylvia.
So yes, I think I will take this next one, and I'm just waiting for the slides to come up because I'm planning to take you back to the deliberation of the approval of the IESA which is probably quite a vivid memory for everybody, for me for sure. So us too, if we can have the slides up. Thank you. So probably, as I said, you may remember that why we were deliberating the IESA, the IESBA took into account and discussed the comments and the concerns that was raised by stakeholders around the changing regulatory environment and framework related to sustainability and sustainability reporting, and also that how these changes might impact the evolution of the sustainability assurance practices. And recognizing these challenges, the board proposed a few changes to the final draft of the IESA in December. And one of those changes was an option for a deferred effective date applicable to the provision relating to performing assurance services at a value chain component. So this board agreed to provide an additional 18 months until July 2028 to the implementation of these provisions, mainly for two reasons. One of them is to have sufficient time to support and facilitate the market transition to the independence regime. And the second reason was to monitor the evolution of assurance practices and, if necessary, develop responses and address any challenges that might arise. The PIOB supported the IESBA in this undertaking to monitor such challenges in coordination with the IEESB, and also to develop a rapid response mechanism. So against this background, the staff and the planning committee considered the possible ways how we can best monitor these potential issues and challenges related to the implementation of the IESA. And the options you can see on the right side of the slide is one of the proposals that we will discuss today, is the establishment of an expert group, the IESA Implementation Monitoring Advisory Group, or IIMAG, just a new acronym. And we are also proposing setting up a digital platform to reach a broader group of stakeholders with the same purpose. We will talk about the ongoing outreach with the key stakeholders, and finally, we will turn to you for input regarding any other potential ways to monitor the market and the implementation of the IESA. And on that note, we will also hear a presentation from Bruno about a French survey aiming to an assessment of the pre-implementation of the provisions regarding the value chain component. And as I mentioned, one of the proposals that was discussed and was supported by the planning committee is that the IESBA establish an expert group, the IESA Implementation Monitoring Advisory Group. I'm still practicing that. And the terms of reference of such group was provided to you as part of agenda item 3C. But this expert group is not unique to IESA. So the IEESB is also discussing, or will discuss, establishing a similar group regarding the implementation of ISSA 5000. And this will be called the ISSA 5000 Technical Implementation Contact Group. And the plan is that these two groups will work closely together regarding the implementation of these two standards. And as we presented in the terms of reference of this advisory group, the objective of the group is to exchange information and views about the practical issues or challenges identified during the implementation of IESA. And based on this information, the group will provide insight, feedback, or advice to inform IESBA's consideration if any timely response is necessary regarding such issues. This group will act as a sounding board to IESBA on practical and technical implementation matters. And finally, it will provide input or collaborate on the development of NEM, non-authoritative guidances and matters to support the effective implementation of the IESA. And the proposal is that this group would consist of maximum 12 members who would act in a voluntary capacity, and an IASB observer would be appointed to the group. And given the objective of this experts group, the competencies of the members are really important. So the expectation is that the members would have expertise in the international independence standards, or they would be directly or actively involved in the adoption and implementation of the IESA at a firm or a jurisdictional level. So given these expectations and the capacities, we anticipate that the members will include individuals from independence practice groups in the firms or sustainability assurance practitioners, or they would be representative of jurisdictional standard setters or PAOs or representatives of accreditation bodies or regulators as well. And it's also important that we aim to set up or have a diverse group, the diversity based on the geography and also on the professional background. So we would like to have professional accountants, but also non-professional accountants involved in this group. And talking about non-professional accountants, we can consider inviting members from the existing sustainability reference group as well. Regarding the selection process, the proposal is that first it would be the IESBA staff who would seek and reach out to potential candidates and discuss the list of potential candidates with the A&I working group, with Amarjit's group, and this group will decide on the final list of the members for the advisory group. And of course, the list of the members would be reported back to the IESBA as well. Once this group is up and running, the plan is that the members would meet virtually, at least in every quarter, for an up to around 2 hours meeting. The group would be chaired by an IESBA board member, and the IESBA staff would provide the administrative support or for the running of this meeting and the operation of the advisory group. Of course, as mentioned, the IESBA would receive updates from the operation of this group, given that the objective that the advisory group and the board would work closely together on the development of potential guidances and rapid response mechanisms. The close coordination with the IASB group would be ensured through the IASB observer, but it's a two-way thing, because at IASB similar advisory group, there will be an IESBA observer, most likely from the staff, to ensure that the communication regarding the issues that have been identified by this group. On the slide, you can see the responsibilities that we have identified and included in these terms of reference, which is really goes back and relates to the objectives of the group that I mentioned. So that was one of the way for the monitoring mechanism. But of course, apart from the insight we receive from the experts, we also propose ways to reach out to a broader group of stakeholders and receive input regarding the IESA implementation from the public as well. One of such ways is proposal is to set up a digital platform, a platform that is hosted on the IESBA's website. And stakeholders would be able to register any issues and challenges related to the adoption and the implementation of IESBA sustainability standards, so not only the IESA. And at the moment, we are considering using a standardized form, because that would really help the processing and assessing the information as well. And once someone submit a form, the platform will acknowledge the receipt. but it is not the objective of this platform to have a two-way communication. So we are not planning to provide response to each and every submission. It would really, the plan is that the IESBA staff would triage these registry or these forms and determine and assess the more substantive matters, and would inform the advisory group, so the IESA implementation advisory group, about these substantive matters. So basically, this would be channeled into the process of the advisory group, and the advisory group would advise the IESBA on the potential way to address such matters. Again, it's not only for the IESA. IEESB is also considering setting up such a platform. So of course, any response we receive through IEESB's platform would be shared with the respective boards as well. And as part of the usual ongoing meetings and contacts with the key stakeholders, we are planning to raise this issue. So we are planning to seek their input on the potential matters and challenges related to the implementation of the IESA. For example, this May, we will talk with the stakeholders advisory group, the jurisdictional standard setters group, which is the new name of the national standard setter. So we are just presenting it here, and forum of firms and the IFAC SMP committee as well. But we anticipate some targeted outreach in the specific jurisdictions as well. And mentioning targeted outreach and specific jurisdictions, I would like to invite Bruno to provide an update on the French survey. And after Bruno's presentation, we will come back to take the questions.
Thank you, Sylvia. Thank you for providing me the opportunity to present a project that we are currently launching with the French profession, what we call a pre-implementation assessment of the value chain element of the standards. So I think we need first to recognize that when we have developed the ISA, we didn't have reports from companies. We didn't have assured reports with independent standards in place. Since we have now implemented CSRD in the French market, we've got a number of reports by companies, which are currently, as I speak, being assured by auditors, mostly financial auditors, and the number of non-PA is quite limited. But the PA firms in France are currently assuring those reports, and we've got local standards for assurance. We've got also local independence requirements. So the idea of this project is to select a number of those reports and to shift from the current French assurance and independence and ethics standards and see how this could apply with ISA 5000 and the ISAs. We need also to recognize, and we are only going to focus on the value chain component, because we need to recognize that there is a significant shift in the independence assessment that we will perform with the value chain as compared with the group component independence assessment. Group component is very similar to the group component that we've got for financial audit, so we know how to do that, and we've got procedures in place to perform those independence assessments, which we can also do before the start of the audit, because the scope of the independence is known at the beginning of the audit, which is not the case for value chain component, because there's a number of decisions to be made before we can perform those independence assessments. So what we would like to do is to go through each of those steps that are being required in order to be able to perform those independence assessments and see what are the difficulties either for implementation or for interpretation of the standards, and gather this information. What I mean by that is once we've got the reports from the companies, we know what are the risk and opportunities which have been assessed by the companies, and we can then start forming the assurance work and working on the independence assessment. So the first step will be to identify the components, the value chain components. Once those value chain components have been identified, we need to determine the work that will be performed in order to perform the assurance on that component. Then we need to know and to assess whether this work can be done at the group level or whether it will be done performed at the value chain component. And if it's being performed at the value chain component, we need to decide who will perform the work to ensure that it is this person, this firm, or this this PA is independent. So there is all those 5 steps, and we want to identify the difficulties both in implementation and also in interpretation of the standards for each of those 5 steps, and see whether we can come up with solutions. And I think that will facilitate helping the other group to interpret the standards if needed. So that's what we're aiming to do. I can provide you with more details. It will be a limited number of reports, but I think we can start with that. And if other jurisdictions or firms are interested also to join the party, they are more than welcome, and we can share the methodology that we're going to follow for that. The objective will be to try to finish that by September, and I hope that by September we can have some initial review of real life examples. I think that's the key word there, real life examples of reports.
Thank you very much. Yeah, Sylvia, go ahead.
Sure. Thank you very much, and indeed for that work, Bruno, which is going to be really informative for us. And just before I open the floor for questions, I just wanted to summarize that what we are seeking for input here is really we would appreciate your views regarding the way forward to these active monitoring mechanism, which at the point proposed to include this advisory group, creating a digital platform, and the ongoing outreach. And we would appreciate your input on the terms of reference for this advisory group that we would like to finalize this Wednesday. And also, if there's any other way or proposal for the monitoring, we would appreciate that. And also regarding Bruno's presentation. So I think I would stop there because a lot of input we are asking here.
Thank you very much to you all, not only for the presentation, but this reveals a lot of work already done to put in place this mechanism, this tool that we had agreed to put in place in December. It was very good that you started by recalling members, because it was a very hectic moment, why and what we decided by the time. It had already been mentioned in some ways by the PIOB. Luigi made a very clear proposal in that respect, and then the board adhered very actively to this proposal, which again also reveals the importance that this board is giving to the adoption and implementation of the standards, the openness of this board to listen to our stakeholders with respect to any difficulties, obstacles, uncertainty, or whatever, and our readiness to be there to respond and collaborate well beyond the mere, well, which is a lot, but the standard setting process. So this is really a strategic positioning from the board, which is being reflected in all these that we have been listening to in this presentation about adoption and implementation. And this tool will probably be one of the most relevant instruments for us to assess some possible concerns, or to overcome, more than that, some possible concerns with respect to the IESA. So thank you for that. And I'm now opening the floor for comments. Amajit. Oh, sorry, I hadn't seen you. Christelle, please.
Thank you. I was wondering, on the slide that you described, Sylvia, on the digital platform, sounded a little bit for me that we should be clear on what should be or shouldn't be the expectation of those who contribute. Do we expect them to make gifts by putting in the envelope some of their struggles and difficulties and experiences? Or do we have a sort of promise that there is going to be a process, and if and when the subject, the matter that was exposed, has some reasoning and needs some clarification, we promise to do something in a certain time frame with a certain due process, whatever. So I think we should be clear on that, so that there is not too high expectation, not too much pressure, or too many critics if things are a little bit slower than expected, or if things are too much merged in some aspects, and the one who bring their ideas or struggles, they don't see really the answers. Yeah.
Thank you very much for raising that, Christelle. This is always the problem with this kind of mechanisms. It's that we don't know where this is going to take us, and there is some risk of reputational damage because people expect a lot, and then they may not have, or at least not see, as you say, how much they have in return for their contributions and their questions and etc. So yes, I think that we might be looking at this in more carefully and see what we can do to avoid that kind of expectations and frustrations if nothing happens apparently further to the communication. And with respect to the digital platform, I think that, as I understood, you were also not completely comfortable with the name digital form, that we should say more about what's in it, but that's a detail. Paul, please.
Thank you. I think it's almost as we look at the different potential structures, making sure there's, as it were, some caution in making sure that as we have, as it were, 3 layers, we're not filling it with a bit of duplication of voices. So we keep speaking to ourselves and not having sufficient diversification in who is being brought to the table in those different groups. It is making sure that there is some level of, when we talk of, for example, establishing that digital platform, as it were, creating the platform is the easy part. It is how we building consistent awareness and bringing voices to the table to use that kind of a platform. And I think it's just being conscious that there are substantial time, energy, and costs implications of really bringing people to make use of that kind of infrastructure. And if anything, just being conscious that really, as we're doing the stakeholder outreach, because these are evolving standards, you have stakeholders who as yet do not know they're your stakeholder. So there's that very proactive engagement so that people are very conscious that they need to add their voice when they better understand what is the implications of these standards being rolled out and the roles they need to carry in implementing them. So it's just being very conscious that the A&I components have cost and time implications, and we need to have really the readiness to take those on and drive it forward to deliver as much value as possible. But I like the thinking. Thank you.
Thank you very much, Paul. I think that your comments are not very far from those from Christelle in terms of making sure that in putting this platform in motion, in place, that we allocate the necessary resources, but just the resources that we need to respond properly and not create too much expectations. There is a calibration, surely, because this is an extraordinary, can be an extraordinarily useful instrument, can create some issues if we don't, I think, address it or use it properly in terms of, as you're saying, not creating too many expectations and being ready to respond properly in ways that is perceived that we are actually using the information that is being taken to us. Thank you. Sadia, please.
So we've heard a lot of cautionary notes on the digital platform. I think I'll be very optimistic about this. This is our opportunity to engage with people we might have never engaged with before. I think it's an open invitation and we will manage it as best as we can. I actually want to touch on the coordination with the IAASB and the IAASB Observer. I think in this respect, we aren't just coordinating, but we have to look forward to integrating. Everything that we are doing needs to be done at the same time with integration, making sure that each other's messages are not left behind as we produce material. I think it's very important because this will add flavor to implementation. But at the same time, there might be an reporting issue that might need to be actually identified. And if that is possible, if we can find someone who has that experience for us to bring an integrated approach that deals with all three things at one time, it would be awesome. I also noted that this group is going to start from the 1st of July 2024. And we said that, sorry, it was one of the slides. First, did I get that wrong? There's it there, 1st July. Until, okay, apologies.
Okay, thank you very much, Sadia. Amajit, I don't know if you want to come in now or you want to listen to everyone first. Okay, Songnam, please.
Thank you. I'm very supportive of working group's proposal, in particular forming the advisory group. I'd like to ask, I have a question about the TOR. Can you put it up on the screen? Because my question is relating to the objectives of the IMEC. So in paragraph 3B, it says the objective is to provide insights, feedback, or advice to the IESBA with a view to informing the IESBA's consideration of the need for any timely response, including any possible refinement, simplification, or the improvement to the IESA. So here my question is, this appears to imply that IESBA will be flexible and willing to make structural change to the newly issued IESA, right? In particular by refining and simplifying the new standards based on the IMEC's advice or input, so even before the effective date. So I'm wondering, this is the plan and goal of our board? Yeah, that's my question. So I need clarification. Thank you.
Thank you, Sonam. Before any response, can we go to James Amajit? Sorry. So James, please.
Thank you. As I think about a global platform and we're trying to promote implementation and we're trying to be responsive and learn, I guess I have a question, and I think, if I look hard enough, I'd know the answer. But do we as a board know what our top 5 areas of the standard that we're concerned about in terms of the implementation? They're tricky. We know, of course, value chain. That's a very, very obvious one. But what are the areas that we as a board are concerned that we would encourage to be focused on, or we're worried about in terms of implementation support? Implementation. So overly complex, maybe there's sophistication, maybe there's something very unique. Maybe it's the general conceptual framework in the context of sustainability. The top 5 things that we're worried about, we should be communicating, because we need to not just have structures, but we've got to have a bit of a focus area. And if we as a board, we should be able to answer, these are the areas we're, back of our mind, we're worried about it. And as implementers, perhaps you should be focusing on and giving us feedback in those areas. So I think that my concern is these are global standards. And I don't know if you've ever had a digital platform in a global environment, but that's a floodgate. So we are not going to get the GPPC sending us something to the digital platform. This is the masses of the world. There's a lot of details and a lot of people that will use that. So we're going to get flooded. But I think the idea is being focused a little bit about what we think we're worried about. It can give some structure, not to close off any other observations and matters, but I'm a little concerned that if we're not focused, we're going to be all over the place. And I'd be selfish. I'd say answer the questions we're worried about and provide input in there.
Thank you, James, for the advice. I think that it's not easy. It's not difficult to identify those areas, how this would work together with the platform. We would have to see, but I agree with you that this can be nothing, and this can be really a source of big problems for us if we are not able to address everything and to make a thorough selection of the questions and information that is relevant. So Amarjit, I think back to you. Sorry. Oh, we have Obi. Sorry, Obikushu. I hadn't seen your hand. Please.
Thank you. Okay, just to add on, I have a question on the SRG and the IIMAG. So my question is with the formation of the IIMAG, will the SRG still be in place? Will they still be functioning? Did you get my question?
Yes.
Can you hear me?
Sylvia, please.
Yeah.
Yes,
Sorry,
Sylvia,
we were
please.
just discussing who should take the question now. And yes, so the idea is that both groups would be still up and running at the same time, given that the objective of the groups are a bit different, because the SRG, it was established as a sounding board to the task force back in the time to provide input regarding the insight of non-professional accountants who are providing sustainability assurance, because these are the group whose views normally the IESBA didn't really get into, or we don't get that much input. So the SRG would be still continue its operation and would provide input from the point of view of non-professional accountants who are providing sustainability assurance services, while this new advisory group would focus on the implementation issues from a wider perspective. So not just from the perspective of non-professional accountants, but even from firms, smaller firms. So that's the difference between the two. And that's why we propose that both of the groups would still operate simultaneously and provide feedback to the board's work.
Which does not prevent us in the future, if we see that there is no merit in keeping the two groups in merging or whatever, but for the time being, it would be important to keep them separated. Also because the advisory group, the SRG, is really, as the name says, it's an advisory group, while this group is like a sponge, or aims to be like a sponge, absorbing the problems, the issues, the questions, the experience of the practitioners in putting the ESA in place. So there is some, for the time being, at least, I think that we need to keep the two and use them for different purposes at the stage where we are. Does not preclude any different decisions in the future. So we have Yohai. Oh, sorry, Janine, before you, Yohai. Okay, Yohai.
So thank you, Chair, and thank you for the team. And I'm very much supportive for the overall proposal. And my first point is sustainability assurance practices, as Paul mentioned, evolving and is likely that unexpected issues will be emerged in the future. So it's important to actively monitor the issues and the IESBA codes application for the sustainability assurance and to respond, identify these issues in a timely manner. And sustainability assurance practices are diverse and is expected to be rapidly changing in the future. So my first point is it might be a good idea to flexibly review and change the monitoring and response mechanisms if necessary. And the second point is that practical issues may be vary depending on the attribute of the assurance professionals, such as whether SAP is a PA or a non-PA, or whether it is a large firm or small and mid-sized firms. And so it's important to consider the feedback from diverse perspectives. And in this context, the establishment of the digital platform and continuous engagement with key stakeholders are very important. And my recommendation is to update the materials such as FAQs and the implementation guides and NAMs based on the feedbacks you receive. So that's my comment. Thank you.
Thank you very much, Yohai. And finally, Janine, please.
Thank you, Chair. Yes, well, a few comments from my side or from the PIOB side. First of all, very good to see that you have been working on this monitoring mechanism. That's something that we also highlighted in our public interest issues document that we publish on our website. So very good to read this, all the materials, and to hear the discussion on this. 2 points. This is on the monitoring side. Reference was already made to the quick response or rapid response mechanism that we also had put in our PI issues, which is, I think, even so important, because you can collect a lot of input on implementation issues in practice, both from PAs and from non-PAs, which could be different issues. But then what would be then, and that's my question, a mechanism to have really a quick response, and that touches upon due process, but that's a question we like the board to think about, how that can be done, because the timeline that you presented through, I believe, something in 28, if you then start thinking about the responses, that could be too late for certain really important things that users in the implementation really struggle with. So that's something to consider. And a comment on the coordination with the IESBA. Very good to see that you have in the IMAC an observer from the IESBA, and that you are going to be, or one of the IESBA staff is going to be an observer in the IESBA's IMAC, so to say. But when I read also the documentation, it looked like that you actually look at your own things first, and then if you see that there is some joint interests, you're going to work on that. I just want to flag that has some coordination risks in there. You have the same terminology. That was a big accomplishment throughout the whole process of getting the standards out. So there is a lot of risk if you don't do not only coordination, but I would think you need to work jointly. When there is terminology and definitions that you use both, and if you would all start thinking for yourselves like, okay, we're going to do FAQ, and it definitely will touch upon definitions that were agreed jointly but have impact on one another's interpretation of the standards of the ISA and the ISA 5000, then this is a risk. So there should be more than, in my view, than coordination on that to avoid any unintended consequences for the other board. And that is actually both ways. It's not goes for both ways. That's my other point. Thank you.
Thank you very much, Janine. We take your points, and I may want to add something at the end, but first of all, I'm going to give the floor back to Amajit to any reaction to all these interventions or to the group if you want.
I had some suggestions actually. So is it okay to?
Yeah.
All right. Okay. So because, we didn't have the benefit of reading it during the drafting stage. So it's more as a IESBA board member, not so much as a ANI working group member. So a couple of suggestions very quickly. One is on the objectives of this group or the TOR. On 3B, what Sunam also mentioned. So my worry is that we should be a little careful in wording that objective, because we are saying that we are looking for feedback or advice on with the objective to look at refinement, simplifications, and other improvements. I worry about other improvements. Simplification is fine. Refinement is also fine, but other improvements can actually get us into a very uncharted territory. And so perhaps we need to be careful while wording that particular TOR, the objective. Also, the first one, the exchange information and views about practical issues or challenges identified during the implementation of ISA. So I would say, can we also say during the implementation or planned implementation? A lot of people would not have started implementing, but they would be anticipating issues. So maybe the use of the word planned implementation may also help. On the digital platform, I think it's, to my mind, it looks like a good idea. We need a public interface, and just like ISSB also has a public forum, it is called Transition Implementation Group on IFRS S1 and S2. It is called TIG, and that's a public forum where they invite comments from people, and also it's very transparent, and they also make it public as to how those comments have been dealt with. There could be some lessons from ISSB. How has it worked? Maybe if we could quickly check if it is useful to have more of a two-way process than just being one-way street. So I guess if it is a public forum, we may not respond to everything, but we could probably collectively look at what we've received and what is substantive, and maybe have some mechanism of responding. To James' point, I think it's very important to have top 5 things that we should worry about. But also that is top down, or maybe more of a specialist view of things, but also the bottoms up approach where we get some feedback from various stakeholders in terms of what their issues and suggestions are. So maybe a mix of both approaches could work. And also it's mentioned that we will have a basis of selecting what are substantive issues. So if you have some guidance around what would be substantive and what would not be substantive, would be useful. I have a couple of other points very quickly. In terms of, selection criteria for picking members for this group, we could look at those jurisdictions where maybe we could give more preference to those jurisdictions where there is a likelihood of implementation. So, we'll have more more valuable feedback and more valuable guidance from the members from those jurisdictions. And we need to have a good balance. We should not be dominated by practitioners. We should also have, as has been pointed out in the paper, you should have a good mix of standard setters, regulators, practitioners, so that you get a diverse view. Another point was we mentioned about certain stakeholders to engage with. I thought IESCO was missing, and we could probably consider putting IESCO also there. Yeah, I think that's pretty much. Yeah, one more point, minor one. While we have the membership, 12 members, I think, but we should also have the flexibility to invite anyone that the chairman of the group or chairperson of the group wants to invite as a special invitee from time to time, just to get some feedback as and when required. Yeah, and that's pretty much what I wanted to say. Yeah, thanks.
Thank you very much, Amarjit. Chana, please.
Amarjit, on objective B, I have a suggestion for you, mainly to address Sunam's point. I think if you stop the sentence at timely responses, then it doesn't say what the response is.
We could do that. Yeah.
Okay, thank you. Sylvia, please.
Thank you. So just a suggestion. I really like the plan we have here, because I think it really casts a wide net in terms of, collecting feedback and inputs from the wider stakeholder group. But at the same time, I worry, and to James's point, the issue of perhaps flooding ourselves with inputs to an extent that this impedes our speed of response. And so perhaps as we set up the digital platform, we should do that with a view to really identify what we're looking for and set it up with the objective of, having an approach to be able to use data analytics or analytical tools to go through. For example, what are we looking for? Is like any comment just from anyone, or are different stakeholders or different stakeholder categorizations, the same comment perhaps coming from a broader group of, coming in more than once, or from a specific type of stakeholder as opposed to another? Does it weigh in more or less, or what are we really screening for, so that we set up the digital platform such that we receive this information and not have, such that we can sift through it rather efficiently, so that we can respond to it swiftly. So I think we should keep that in mind as we set it up.
Thank you, Rania. Sylvia.
I just wanted to quickly react and thank you for all the excellent proposals. And regarding the advisory group, we will propose some changes to the terms of reference based on what we have heard. And thank you very much, Chana, for raising that proposal. It was really, really helpful. And also, so we will make some changes based on what we have heard and circulate it to the group with the view of approval on Wednesday. There were a really good discussion on the digital platform, and this is something that we already discussed with IESB staff regarding the accountability for what have been sent to us, and the transparency. And I think we will consider how to be more focused. But I think one of the areas that we were thinking about, Rania, to your point, is to have these so to say, these reports or pre-written forms that we can use to prevent, then we would get responses from all over. And also with these forms, we can identify those who have registered, and that could inform our triage as well. But this is there are still a lot to consider, but I think it's as I have heard, there is proposal or support for setting up these digital platforms. So thank you very much for these comments.
Yes, thank you, Chair. Just I thought there were a couple of additional points that were raised, especially by Janine, and I just wanted to get back to Janine. Janine, you had raised a question as to what would be a rapid response that the board might put into action to respond to any significant issue or matter that might be raised by any particular stakeholder. I would say it's a bit premature at this point to determine what that response might be, and it really will depend on what the board is hearing through, for example, the digital platform, the nature and the significance of the matter and the urgency of addressing it. And if need be, the board can prioritize its attention, its focus, its resources on addressing any matter of substance that might concern the standards itself. Not that we should be suggesting that the ESA is deficient at this point, not at all. But if there are any issues that come up during the implementation of the ESA that would warrant the board's attention, again, on the basis of the advice of the EMAG, all things considered, the board ought to make the right determination. And if necessary, address a matter as a matter of priority. Again, depends on the nature of the particular issue. To your second question regarding coordination with IEESB, yes, I would say the way we're envisaging it is that it's certainly not intended to be sequential in the sense that we're going to be looking at any matter that's raised directly to IESBA and then have the discussion with the EMAG and then connect with IEESB. That's not really how we're envisaging it. We are going to have reciprocal observership on our respective groups. On IEESB, we're going to have an IESBA observer, which is going to be Sylvia. And on the IEESB side, they're going to have a staff member on their side to be an observer on our group. And our observers are going to be participating, our observer Sylvia, that is going to be participating in each and every quarterly meeting that they're going to be holding, and vice versa. And through that mechanism, there's going to be direct coordination. So if there are any matters that would concern the implementation of both boards standards, those matters will be picked up and addressed in a joint coordinated fashion, and not sort of in a disjointed manner. So I think maybe it's a perception as how it's being set up, but in practice, there's going to be ongoing close coordination between the two groups so that issues are addressed jointly where indeed there is joint coordination that's warranted.
Thank you, Ken. Janine, please.
Yes, thanks, Ken, for explaining the way you look at it. Maybe to clarify on the coordination, it's not so much, in the IMAC, that there you have these observers, but it's when you do a response based on implementation issues that come through the IMAC, and there is where the risk is in the coordination, that if you would decide to do some FAQ and to issue that or some other NEM or whatever, and the IEESB as well, and definitions are at stake, so to say, or could be at stake, that would trigger unintended issues for the other board. That is where I'm looking at, where I see the biggest coordination risk. So it's not as such in the IMAC, but it's more in what you're going to do in your rapid response mechanism. And I was referring also to the due process, like you have due process requirements that are like the IEESB has that as well. Of course, how you deal and when you are going to expose things to get input. Timelines are normally long for revising standards. So the point that I wanted to make on this quick response mechanism is also to challenge you to look at, in case we have an urgent thing that we think would really help everyone who is implementing these standards, and or unintended consequences maybe, or to clarify important things, and it requires some changes in a standard. How could you do that quickly That is, and do you have the means, and are the procedures that are currently in place sufficient for that? Thank you.
I just wanted to comment on the rapid response, but not specifically on that. I think it's important of some of the sentiment from the conversation here. If there's a pivotal issue where implementation matters, it's our ability to see that. And that's what I meant in terms of, I think Rania expressed it very well, being bogged down. You're missing the quick ability. Secondly, it's how quickly you can escalate that as a priority action within the board. So that's the board's flexibilities. As quickly and as urgently when a matter is required to run through our due process, I know the board can operate it through our existing due process relatively flexible. On rapid responses for standards, I just have to let you know that everyone says do it quick, but don't do it unless I agree. And so due process plays very important from a regulatory point of view and our practitioners. So it's a challenge at the back end in concept, but we know we can issue a proposal and we can get responses and we can resolve a standard setting issue very, very timely. But we've got to be quick to identify, escalate, and then prioritize. And I think that will be our thematic approach as we get to the, I think, a voluminous matter of implementation concerns and issues. Thanks.
Thank you, James. David, please.
Thank you, Chair. One of the things I would suggest, and I think we've just touched on it a little bit here, is rather than think of words like rapid, just think about it from the perspective of what do we need to achieve and why, but also learn from others. There's a reason, for example, the Interpretation Committee under IFRS has the process it does. So I'm not saying their process is the right one or is the one that we should necessarily emulate, but we certainly can learn from them. And we need to think about, to Janine's point, what does due diligence mean in the context of responding to an emerging issue? How do we do it? What comes to the board? What doesn't need to come to the board? And that's where I think learning from other foundations and standard setters could be very useful for us as we define, because a digital platform, as much as I think all of you know I love digital, it's a mechanism for communication. That's all it is. So before we start worrying about the mechanism of communication, which is absolutely important, what's the process it's supporting? That's the fundamental thing that we need to consider in the TOR, and then the digital platform becomes the way to do that. So maybe just think about kind of the order of things might be a helpful way to just help us slow down where we need to, but speed up where we can, if that's helpful.
Thank you, David. Amarjit.
Just to kind of reiterate a word of caution, we need to be very clear what is the boundary of this group. We should draw that line very carefully. Is to help resolve the implementation issues. I don't think the intention is to open up for revision of standards. So that should not be on the table, at least now. I mean, that we can see later, but immediate issue is there an implementation issue? Here is a group which will respond to the issue that is flagged. So,
thank you, Amarjit. So, any other comments? So, which takeaways do we take away from this conversation? So, broad support for the platform. That's the main takeaway. I think that everyone is in agreement that to create this, the usefulness of such an instrument, such a tool, and etc. The objective of this instrument is mostly, or mainly, or maybe only, which is a lot, to help overcoming issues with the implementation of the existing standards, provide support, allow us to understand where we are needed and in which forms and formats can we help. The way we can help can range between one-on-one conversation to solve an issue, all the way to significant guidance, additional guidance, FNQs, and that's the topic, because I think that it's necessary to address that topic. May it lead to reopening the standards? I don't think that we can respond to that question, because in principle, I think that we should all be in a point where we believe that the standards, as they were discussed, developed, approved, certified, are strong. Now, we don't put aside for this standard or any standard that there can be a fatal flaw, that can be something that doesn't work. And if and when something comes to our knowledge that makes us consider that we might need to do something, of course, we will need to follow the due process all the way up and down, respecting the process that is in place for standard setting and amending standards. Now, of course, this may open another question, which is, should we or someone look at the due process and make it more agile in some points to respond to these kind of situations? I don't know. I don't have an answer. But there's something that we, the IESBA, we cannot overcome an existing standard setting due process. We need to follow it, respect it, etc. So the question, if anything, is that question, if relevant, of course, if we are speaking about rapid, about agile, and etc., we need to have something that allows us to do that in that way. With respect to the platform, the digital platform, and I thought it was your point, Christelle, a few minutes ago, but David somehow helped going into or addressing the same topic. Maybe we should really find a name for it, because, as you say, digital platform speaks about the communication instrument, not that much about what we aim with that platform, what's inside that platform, what we want to address. So this is nothing but just finding a nice name for the digital platform. And finally, this concern, which was very much my concern at the start, but was shared by some of you, about what we do with this information. First, if we get flooded with 1,000, 10,000 requests, and we know that people sometimes are very creative and very lonely, and they use these platforms to, yeah, that's truth. I think that we all have that experience. Use these platforms to communicate all kind of thoughts or considerations, and it may become very, very difficult for us to select the information. This is the first risk. Second, as I mentioned before, is a reputational risk. If we don't respect, we create expectations, but we don't respond. People feel that they are not considered, and then we may, while wanting to do something which is very valuable, which is opening our door and our ears to stakeholders' consideration, creating an additional reputational risk of people saying, no, the IESBA doesn't listen, doesn't respond. I shared a 100 pages commentary and nobody brought me anything. By the way, the commentary was about something else, but people expect to have a response. So I think that this, for sure, and from what I heard here, it's more than agreed that we want this. We want what is being proposed. Maybe it needs some tweaks with respect to the name, with respect to the process, and with respect to addressing these risks that we, with all our goodwill, with our openness, with our the offer of our time and resources to do the best thing, risk having a result which is not proportional, exactly the one that we were looking for. So I think this is a great proposal. I think that we all think it's a great proposal and a great, it's really something new, again, and it shows how much focused we are on making this work and on accepting that we do not know anything. We did not know everything when the standards were approved, when the standards were certified. We all assumed that, and yeah, and here we are to help stakeholders with any issues that may and will for sure show when they are starting to implement. So thank you very much for these very valuable contributions, and I think that the group will not easily, but we'll process all this information and come back with something final, which is which is really in line with the objective and the purpose of this, the good purpose of this instrument. And I don't see anyone else, so we'll stop here right on time, which is fantastic, and reconvene for the last part of this session on adoption and implementation at 4. Thank you. Yeah, being very disciplined. Okay, welcome back to the last part of the meeting. Before we go to the third and last part of this discussion on adoption and implementation, I'll hand over to Ken for an administrative announcement or request.
Yeah, just an administrative matter, Chair. Thank you very much. So each board member, each board participant should have received from ASTU a form to complete. That's a code of conduct, the public interest declaration, and the assignment of copyright. There is a typo on this form which needs to be fixed. We are going to reprint the form and circulate those to all of you again. So I know some of you have already signed the form. And you probably didn't read it close enough because the form does refer to a staff fellow. And if you're on the board, you're not a staff fellow. So we're going to correct this to refer to board members as appropriate. Yes, Christelle.
I need to make to have some archaeology in my files. Could you send us the last version of the code of conduct, please? I don't sign if I don't have it.
I think we can circulate that, right? Actually, we have an electronic version. Yep. Yes, yes, correct. It's 2 typos. Yes, thank you.
Okay, thank you very much, Ken, and apologies for these typos and for making some of you sign again. And it's a very good practice to read the code of conduct before signing the form. So I encourage everyone, if you haven't done so, to read it before you sign. So back to the session on adoption and implementation, and this is going to be the third part of this session, and the subject is an update and possibly some discussion on the engagement of the IESBA with the IAF, which is the International Accreditation Forum representing the non-professional accountants. So just very briefly, I don't need to recall that the standards that we developed are profession agnostic, can be used by non-professional accountants as well, but also that AIF months ago, I think that almost 1 year ago, I don't know, agreed to adopt or implement, I don't know exactly which word I should use, the IESBA standards, to work together with us to come up with something which includes or incorporates the principles in our standards. So what has been happening since then is that there has been some work with this organization to make sure that we help them with the proper implementation of the standards, and to make sure that once they are finished, they are able to really follow the standards and put them in practice, and etc. But Ken and John, who have been involved in this job, will better say about what's been happening, where we are, and what the next steps or expectations are. Ken, please, I'm handing over to you.
Yes, and Well, John and Keith will really be part of this presentation, but I'll pass it to John first to lead us through the presentation slides. Over to you, John.
Okay, thanks, Ken. Thanks, Gabriella. So I'll run through a presentation from our recent interaction with the IAF. But as Ken and Keith were also there, so feel free to jump in at any point if you think I've missed any important points. Okay, so just a bit of background to the meeting with the IAF, which we had on 27th and 28th of February. As Gabriella mentioned, in February 2024, the IAF and the IESBA announced a strategic partnership. And the partnership aims to advance the use of a common framework of high standards of ethical conduct to underpin trust in the assurance of sustainability information. So the IAF and the IESBA have a common objective to support the growth of transparent, relevant and trustworthy corporate sustainability disclosures. During 2024 and the first quarter of this year, we've maintained engagement with the IAF in respect of the work that the IAF has been doing in relation to mapping, and also some meetings around intellectual property copyright aspects as well. So the IAF, they've mapped its current ethics requirements in their accreditation framework for sustainability assurance engagements to the IESA ED. So just bear that in mind. So that's one point we need to come back to in a second. And that was provided to the IESBA staff at the end of January. And that formed the basis of our discussions with the IAF as at the 27th and 28th of February. So in terms of attendees, Ken, Keith and myself attended as representatives for the IESBA. The IAF had representatives there, including their chair, Emanuele Riva. There was a representative from the TIC Council or TIC Council. I'll just give you a little bit of background on the TIC Council because it's quite relevant for the discussion today. So they're an international association representing independent testing, inspection and certification activities. And in some sense, they're kind of like a PAO, so like a professional accounting organisation, but a global one. They've got over 100 members, which represents 160 countries. And the members are international third-party testing, inspection, certification and verification providers. So this includes, I think we've mentioned to you before, the conformity assessment bodies, which are essentially they're the firms, and they're the ones that provide the sustainability assurance engagements. So the TIC Council also, they're part of their remit is they engage with governments and key stakeholders to advocate for effective solutions in the public, to protect the public and support innovation and facilitate trade. There were also representatives at the meeting from national accreditation bodies. So there was the United Kingdom Accreditation Service was represented, as well as Accredia, which is an Italian accreditation body. So the meeting objectives. So this was an opportunity for us to clarify and address key issues in the IAF's mapping to the IESA and to identify any significant gaps between the two frameworks. We also discussed next steps around developing a common framework of robust ethics and independent standards for sustainability assurance engagements. And I'll come back to that in a moment. And there was also an initial exploration around the nature, scope and timing for the IESBA's implementation support for accreditation bodies and also conformity assessment bodies. This is still to be determined, and it's kind of the subject of today's discussion with the board. Before going into the details of the meeting, we just thought it might be relevant and important to explain what it is that's required to comply with ISA 5000 and the IESA. It's obviously important because jurisdictions might set requirements for sustainability assurance engagements to be performed under ISA 5000. So in other words, these conformity assessment bodies, they might be obligated to undertake sustainability assurance engagements under ISA 5000. So under that standard, so ISA 5000, in order to claim compliance with the standard, you have to meet all the requirements of the standard. All the requirements must be adhered to. ISA 5000 is also premised on compliance with the relevant ethical requirements, so the IESA and also the ISQMs. But it can be requirements that an appropriate authority has determined to be at least as demanding. To be at least as demanding as the IESA, they must address all the matters that are listed within ISA 5000 and also impose obligations that achieve the aims of the requirements in the IESA. So in other words, the requirements, they don't need to be identical as such, but they must achieve the aims or objectives of the IESA. And then ISA 5000 sets out the critical aspects of the IESA. So for example, the fundamental principles, conceptual framework, and the various sections within the international independent standards and the ethics requirements. In terms of an appropriate authority, this can be a national standard setter, it can be a regulator or an oversight body, but it also can be, and again, this is set out in ISA 5000, or it also can be a designated accreditation organisation which is recognised by a public authority. So this concept around the appropriate authorities is important as we go through the proposed steps and way forward, which we'll discuss with you today. All right, so as I mentioned, the IAF has mapped their current ethics requirements under the accreditation framework, and they map that to the IESA ED. So what they've come up with, essentially it falls within three separate buckets. So there are matters which they've considered to be equivalent requirements. So this consists of elements and requirements that the IAF has assessed to be fully aligned across the IAF and the IESA frameworks. So for example, the IAF has assessed that their framework is aligned to the IESA's fundamental principles and conceptual framework. The next bucket is there are different but substantially aligned requirements. So these are elements where the IAF has assessed that whilst the requirements between the frameworks might be different, the objectives, aims and outcomes of the requirements are aligned. So just as a couple of examples. So first of all, in relation to fees, the IAF framework does not require disclosure of fees, but they've got other measures in place which they believe creates impartiality for all clients in terms of the fee and fee amounts. Another example relates to the responsibilities for CABs. And what they're saying is that the authority and assurance is not always vested in a single individual with formal decision-making power, as it is in the accounting model. And we'll come back to that at one point during the presentation too. And then the third bucket is where there are requirements that are not covered by the IAF's current framework. So they're not within the accreditation framework or the standards that are typically applied by CABs, so the conformity assessment bodies. So this includes aspects around NOCLA, so non-compliance with laws and regulations, the public interest entity provisions, networks, and things along in respect of long association as well. Of interest, though, to us, there was a few requirements that the IAAF have in their framework were actually possibly exceed what is in the IESA framework. So I'll give you a few examples here. So with respect to competence, conformity assessment bodies have a specific standard for competencies that are required, and they're assessed against these as part of their accreditation process. And the accreditation process actually includes an annual assessment of compliance with the requirements. In respect of consulting services, they have essentially a blanket prohibition that you can't provide a consulting service to an assurance client if it relates to the subject matter of the assurance. And this does apply to all assurance clients, so it's not just a public interest entity. So it is a blanket sort of prohibition for consulting services where it impacts the subject matter. Another thing which was quite interesting is that all the sustainability assurance engagements will be subject to a certification committee or a review committee, essentially. So the leader on the engagement, they will make recommendations to the committee, and then the committee will assess all of the evidence and the recommendations, and then that's where decision sort of is arrived at. So it's kind of like an engagement quality reviewer in a sense, but it actually applies to all their engagements, not just those that would apply to PIEs, for example. So from the discussion, so in terms of the proposed actions to address the gaps, so with the equivalent requirements, they have undertaken the analysis. However, as I mentioned before, it has been done against the IESA ED. So at the moment, they're currently updating their mapping analysis to the final IESA. But also when they provided us the information around the mapping, where there was that equivalency assessment that they'd made, they did not provide us with that analysis and assessment. So that would be the next part of that, would be for them to explain where they believe there is equivalency and why they believe the requirements have been met. With relation to the different but substantially aligned aspects, so for the IAF will address this in one or two ways. So it will either be to adopt the IESA requirements. So for example, we had a detailed discussion around fee disclosures, and that was somewhere where they believed that they would take on those requirements. Or alternatively, they would demonstrate how the aims of the IESA's requirements are achieved. So this goes back to that at least as demanding discussion we talked about before. And then the third bucket, where the requirements are not covered by the IAF's current framework, this is where they would be adopting the full aspects of the IESA requirements and integrating them within the IAF framework. So just moving on to the proposed next steps and estimated timing resulting from this meeting. So as mentioned, the IAF needs to update their mapping to the final IESA and explain where they believe there's equivalence or full alignment with requirements. They've requested that the IESBA is involved in reviewing that detailed mapping with respect to the IAF's evaluation and identified gaps. This is something that's anticipated to be completed by June this year. The IAF will develop a working document which would summarise the gaps and the processes to follow to address those gaps. So that's like an internal document of the IAF. And this other one, which is for consideration by the board, is that they've requested a joint factual statement between the IAF, the IESBA and the TIC Council, covering the nature of the work performed. The IAF believes that this will help them when they're approaching jurisdictions with the view to enable non-professional accountants to undertake sustainability assurance engagements. So then the next step would be the development of a program or a scheme. That seems to be interchangeable sort of terminology. And these needs to be developed, and they're anticipating to develop this by October 25. And I'll explain that process on the next slide. And the October date that's when they have their annual meeting. The IAF has their annual meeting in October, and they wanted to be able to present the program to its members during that meeting in terms of getting feedback from members. And then finally, the accreditation bodies and the conformity assessment bodies would need to be trained on the new program. And from that, the IAF would be requesting assistance from the IESBA as well. So just on the last slide is around the development of a program or scheme. So from the discussion, what would happen is a scheme owner would develop a program, and that would cover both mandatory and voluntary sustainability assurance engagements undertaken under ISA 5000. So essentially this would require compliance with ISA 5000 in full. As I mentioned before, to claim compliance with the standard, you have to comply with all the requirements. And then the program would refer to IESA or ISQM requirements where their gaps have been identified. So through that process I mentioned before, where there's substantially aligned or where there are the requirements don't exist as such in the IAF framework. The program would then be endorsed by the IAF. Then they spoke about the next step being an accreditation body would pilot the program, and then in conjunction with an appropriate regulator would determine that the program is at least as demanding as the ISQM1. So this has come back to that discussion about before around the appropriate authority assessing that the requirements are at least as demanding as those in the IESA. So then the next step is that the national accreditation bodies, they then accredit the conformity of assessment bodies against the program to enable them to undertake sustainability assurance engagements in the relevant jurisdictions. And then the last step would be the conformity assessment bodies then carry out the sustainability assurance engagements in compliance with the program. So that brings it to the end of the presentation, but I'll pause there if Ken or Kate wanted to add anything from what I've mentioned so far.
Yeah, I mean, the thing I'm going to find, or I'm looking to find most interesting in all of this, is that there is going to come a stage where they're looking to a regulator to turn around and say, we've examined all this and what you've got is at least as demanding as the IESA. And of course, at the moment, no regulators actually have an imposed responsibility to do that unless their own regulations already say that they would do that. So it'll be interesting to see which regulators might be prepared to do that, who might step forward, whether they would do it, and so on. So to me, that's a little bit of a grey area at the moment as to how that's actually going to happen in practice. Who's going to do that?
Yeah, so maybe I'll provide a bit of additional context here. The starting point really is ISA 5000, which is the assurance standard for sustainability. So the way they are intending to approach ISA 5000 is essentially to adopt the whole of the assurance standard as it is without any amendment. And the reason why they are intending to, in effect, adopt ISA 5000 as a whole is because they're saying that if in certain jurisdictions, the legal or regulatory requirement for sustainability assurance is for the practitioner to conduct the engagement in accordance with ISA 5000, that is what they would like to do, meaning to say to comply with the legal or regulatory requirement, because that's what's the local requirement. IEF itself has no authority to mandate which standard to be used, because IEF is essentially, well, first of all, it's a global association or organization for accreditation bodies. But even at the national level, the accreditation bodies are essentially just, in concept, they are just assurers of the programs or the schemes. They are not regulators themselves. So if we were to take the example of the UK, for example, the accreditation body is UCAS, the UK Accreditation Service. UCAS is not the regulator per se, but it is the accreditation body for conformity assessment bodies in the UK, or certification bodies. So what the certification bodies are able to do is to verify that the schemes or the programs essentially are the certification programs. In other words, that's the document that specifies the various requirements that an assurance practitioner should be complying with in conducting an assurance engagement on sustainability information. So UCAS, as an accreditation body, will accredit that program, in other words, to make sure that that program actually meets all the requirements to underpin the assurance report that the practitioner will issue. As I said, the accreditation bodies do not have the authority around the world to mandate which standard to be used. That is really the function or the responsibility of the local regulator or legislator. So because of that, and because on the IF side, their desire is to enable conformity assessment bodies to be able to perform sustainability assurance engagements in accordance with ISA 5000, that is why they are intending to adopt ISA 5000 as a whole. When it comes to the ESA, the situation is slightly different because by and large, jurisdictions generally don't mandate the ESA. Well, there are some jurisdictions that do mandate the use of the code, of course, but generally it's a lot more of a fragmented landscape when it comes to ethics and independent standards. And because because ISA 5000 is premised on the ESA or standards that are ISA demanding, at least for those sustainable relations engagements that are within the scope of the ESA. It's not all sustainable relations engagements, just to remind ourselves. It's only those sustainable relations engagements on sustainable information prepared in accordance with the general purpose framework, and that information required by law regulation or publicly disclosed. So it's a narrow scope of engagements covered by the ESA. But for those engagements, IAF would like the use of ISA 5000. And because ISA 5000, as I say, is premised on the ESA, they would like to be able to demonstrate that conformity assessment bodies, or CABs, as if called, just for short, they would like to demonstrate that CABs have complied with standards at least as demanding as the ESA in performing ISA 5000 engagements. So that's really where they're coming, what they're trying to achieve. In terms of how they go about it, how they are planning to go about it, as John has kind of outlined, essentially there are two issues that they are on their side they are having to grapple with. One is, what are the gaps? What is missing in their current set of requirements in the IAF sort of ecosystem, whether those requirements are in the ISO standards or whether they sit in certain mandatory documents that IAF has issued. But taken together, these are their current requirements, and these are the requirements in the ESA. And their task is really to identify what is missing or what is different. And essentially that's, John, I don't know if you can flip back to your earlier slide where you sort of identified the, this one. Sorry, the next one maybe. Yeah. So that's a bit of a gap analysis that they're doing, meaning to say, first of all, identify what is equivalent, what is more stringent than the ESR requirements. Second bucket, what is it that's not there? And these are the kind of the two most straightforward buckets. The more challenging bucket for them is really where they believe they have certain provisions or certain requirements that seem to be achieving the same aims or the same objectives as the corresponding requirements in the ESA, but there potentially could be some nuances in terms of how they've approached their principles or their requirements compared with how the ESA approaches its own requirements. And John, I don't know if you've given the example of fees, but there are a number of other areas. In fact, I mean, it's some of those are already on the slide here. In terms of the gaps, for sure, I mean, there are essentially, they do not deal with the issue of NOCRA responding to non-compliance with laws and regulations. They do not have the concept of a public interest entity. In fact, in certain areas like the provision of non-assurance services, they seem to be stricter than the ESA because they prohibit all consultancy services to assurance clients, whether or not these clients are PIs or non-PIs, and whether those consultancy services in fact create a self-review threat or not. So it is a complete prohibition on consultancy services for system assurance clients. Networks, they do not have, I mean, they talk about the concept of groups, not so much in relation to the client, but groups in terms of their own conformity assessment bodies. Maybe these are large service providers like DNV or Bureau Veritas or Intertech or BIS, I think, in the UK. So there are a number of those very large conformity assessment bodies that they consider more to be groups, but they do not really have a corresponding concept of a network, which is, at least the way we understand networks under the code, that would be a broader concept than just groups or sort of entities that belong to the same group as it is. And then long association, they don't really deal with long association. They do not have prescriptive requirements like we have in terms of partner rotation or engagement leader rotation in the ESA. So there are clear gaps there. On the differences, there are some nuances. On the conceptual framework, they seem to believe they have something similar, but we've not seen exactly what they have. It seems to be a bit of a risk-based approach that they've sort of mentioned, John. But we need to see exactly what they have. They didn't present all the details to us, so we do need to have make a bit of that assessment. So in terms of the way forward, what they really would like to do is to have this, as John has kind of outlined here in terms of the next steps, is to complete this mapping, in fact, to update it vis-a-vis the final ESA, because the version of the ESA they used actually was the exposure draft, because they didn't have, I mean, we just very recently issued the ESA, so they hadn't had a chance to update their mapping document, so they need to really update it, refresh it, and present to us their assessments. As John has explained, the way they are thinking about approaching it is to have IAF develop a working document or kind of a reference document, as we call it, which would essentially summarize all of these gaps, all of these differences, and provide this working document to an organization like the TIC Council. And the TIC Council is the association of the CABs, which has the ability to develop this program, which can then be rolled out across all the CABs. And not just the CABs that are members of TIC. In fact, they did assert to us that once they have this program developed, this could be used by any conformity assessment body or even any assurance provider outside of TIC Council. In other words, it would be made available on a global basis. And with that program, what they will then need to do, which is their next step, which is then to certify this program to, in effect, then give the go-ahead to the CABs to use that program to carry out those sustainable assurance engagements. And how they would certify it essentially is what they would normally do, which is really to make sure that the program of requirements meets or has all the requirements that they've set out or they've identified within this working document, plus in additional requirements that would come through the ISO channel. And the ISO standards, there are a number of requirements that assurance providers need to comply with in order to be able to be certified to undertake those assurance engagements. So that's what they will need to do. Once they have this program, then it would be for the national accreditation body, a body like UCAS, for example, in UK, or Accredia in Italy, that would then make that assessment of at least as demanding. So it will be the accreditation body that will make that assessment and will make that assertion of at least as demanding. But in order to lend, I suppose, some legitimacy to that assessment, they would like the local regulator in the UK, it's most likely going to be the UK FRC. In Italy, I'm not sure who it's going to be, but essentially they would like a regulator to then agree to that assessment of at least as demanding, which then essentially would give the authority, I suppose, to the accreditation body to then certify the program to contain all the necessary requirements to carry out engagements under ISA 5000 or perhaps under any other assurance framework that would leverage or at least be premised on standards at least as demanding as ESA. And that's really the way they are intending to proceed. John, I'm not sure if you pointed, so you've outlined the timeline there. Essentially, they are expecting to take about a couple of months to update their mapping. They will provide this to us for us to review and provide them with feedback. Then it's probably been another couple of months for them to work through any changes and then to essentially develop that program. They are targeting towards the end of June to have, I suppose, a final program, which they can then certify that to contain all the relevant requirements. And insofar as the ethics and independence are concerned, it will be at least as this assertion of at least as demanding. They indicated end of June, but I suspect it's going to be a very tall order. So it's probably towards the end of July, which is what John has. And that then takes me then to this suggestion from IEF that they would like IESBA to essentially issue a joint statement with them that IESBA has, they understand that IESBA is not in a position to endorse or issue any statement of at least as demanding, but what they would like to have from IESBA, which is gonna help lend support to what they would like to do in presenting their analysis to the relevant regulator, is for this board to issue a factual statement, as John has outlined, a factual statement as to the work that's been done in working with IAF, in reviewing the analysis and providing them with feedback. What this actual factual statement will be, of course, is for discussion within this board, and in terms of the nature of it and what is it that can be said. But this is really the direction they're intending to go. And with that support from IESBA, their intent then is to go to their annual meeting, the annual meeting of IEF in October, around mid-October. They haven't finalized the dates yet, but around mid-October, at which they will make that announcement that they have this program that's aligned to ISA 5000. It's aligned to the IESA on the basis of at least as demanding, and therefore CABs will be able to use this program to undertake system assurance engagements under the relevant laws and regulations. So maybe I'll pause here to see if there are any questions or comments from the board for John, Keith, and myself.
Thank you, Ken, John, and Keith. Mark, please.
So I think Ken, in principle, all of that makes sense. I think the challenge in terms of landing a position for this board is that there are some jurisdictions, like in France and in Australia, where there is clarity over how sustainability engagements are moving forward, who reports under what reporting framework, using what assurance standards, using, what are the relevant ethical requirements. In a lot of others, and in particular in the UK, for instance, the government still has to consult on proposals as to how the regime will work. And that's just the sort of, that's just a slight caution for us, because obviously we want to be supportive, but we don't want to create a situation where later on we've created something that jurisdictions disagree with a position that we've taken. And that's not because I think that this board would ever land on something unreasonable. It's just that in many jurisdictions, many of the important decisions have yet to be taken. And therefore we are working in a bit of a vacuum.
Thank you, Mark. Now other questions. Ken, do you want to respond or?
Yeah, I mean, it's there is certainly a level of uncertainty, a degree of uncertainty as to how the landscape of sustainability assurance will develop. But even for sustainability assurance, that is going to be premised on there being the necessary legal or regulatory framework with respect to the reporting of sustainability information. So Australia has already gone ahead, so we know we have clarity there. The UK, I know, is there are still ongoing discussions, and no decision has been made. In the EU, we had the CSRD. We know that's already in the relevant legislation and will need to be transposed at the member state level. But then we have the omnibus proposals that are coming in that are creating another sort of layer of uncertainty. So I think at this stage it's a bit premature to say what is it that this board will be able to assert in relation to its working closely with IAF or even the likes of the council. We will see what they present to us, and we will see to what extent the board will be comfortable with making any sort of assertions, be it factual or non-factual.
Thank you, Ken. Rich, I know that you want to chime in, but let me just share some thoughts here. I think that given what Ken has just presented and the approach to the work with the IAF and etc., I don't think that whatever we do, unless we were to endorse or say that it's equivalent, which Ken has already made clear that it's not the purpose. I don't think that whatever we do will limit the freedom, the necessary freedom of jurisdictions of doing whatever they want. Accepting these non-professional accountants, not accepting, if they accept, deciding on the appropriate supervisory oversight system and etc. So for me, there are, and I think that's the reality, two different areas. One is this work to make sure that there is a standard that is there, that there is consistency, that whoever is going to provide the services will have the same standards and etc. And I think that if anything, we discussed this over the last 2 years so many times, and we all agreed that this is the best outcome for the public interest, the best outcome for the practitioners who will not have to deal with the competition of others who don't have the same standards, etc. But I think that this is really a good product in the sense also that it preserves, it keeps all the freedom for the jurisdictions to do whatever they want. We are offering the product, and then each jurisdiction will say, I don't like it, I want to have my own system or my own framework or whatever, and to decide on the oversight system. So unless we were, I repeat, unless we were to say this is equivalent, this is at the same level, we endorse the use of the standard, which we most probably are not going to do. This is a very neutral instrument which can be used as much as jurisdictions want to use it. That's it, right? So, Rich, please.
Yes, and thank you both Ken and your comments were helpful. I guess I can see some pluses and minuses. Obviously, this is a way to get non-PAs to come along, particularly if you have jurisdictions where nobody actually adopts the standard or isn't planning to. And this, I don't mean this as a negative, but don't have a mechanism to actually monitor or enforce it for non-PAs, perhaps. So I think that's helpful. On the other hand, I think we need to, I guess we'll see whether we think equivalencies and gaps are what they are down the road, because I think that's, I think we have to be careful that we get somehow in a position where, to your point, Gabriella, we're not trying to endorse it, but we can also have to be careful with whatever statement we make, that they don't use that as endorsement if we don't really like some of the gaps from that standpoint. So
Yeah, mind
I
you,
think we need to know a lot more.
Yeah, no, absolutely. And you know what I mean, just and to be fair to them, they haven't really pushed back in our discussions with them as we were working through. We spent a day and a half with them working through the detail of the analysis. They did not push back. You know, when we raised the question as to whether there was equivalency, you know, they went through the thought process. I mean, John gave the example of fees, for example, fee disclosure for PIs that we have in our IESA. They sort of walked us through a bit of the conceptual approach they take with regard to fees, not so much in terms of disclosure, but more in terms of how they view fees as potentially a source of conflicts or pressures, etc., or self-interest. But they did say that they did acknowledge that, yes, they do not have disclosure requirements or transparency around fees. And they said, yes, that's no problem. We will pick it up. And we went through basically a number of issues, you know, as I said, networks, PIs, no claw, etc. there's no pushback at all. So they want to do the right thing. What they made very clear to us is they are not able to, unlike the ISA 5000, which are going to take us as a whole. Well, essentially they told us that they do not believe that they would be able to impose or have cabs comply directly with the IESA, simply because they have already a body of requirements, to whatever magnitude that cabs already are subject to, and therefore they want to retain this, but identify what else ought to come in order to achieve that level of equivalency with regard to the IESA. But maybe an additional point of context, if I may share with the board as well, especially in the context of the EU and the proposals, the omnibus proposals that have recently come out from the European Commission. They did share with us that now, if the omnibus proposals were to be finalized more or less as they have been presented, essentially they would be looking at perhaps no more than 10 to 20 cabs that would be using our standards, which in the whole scheme of things is not a lot. Essentially, they were looking at the 10 to 20 largest, conformity assessment bodies like the DNVs, SGS, etc. But otherwise, they didn't think. There was almost kind of a comment in passing to us that it seemed that they're doing all of this work and they're investing all of these resources to try to put together requirements, standards, etc., that are as demanding for the as the ESA for a very small group of cabs that would benefit from having those standards in order to be able to undertake assurance engagements in accordance with ISA 5000. Maybe that's going to be the case in the initial years, but we don't know. As more jurisdictions get on track in terms of putting in place the relevant framework for sustainability reporting, and then with that assurance, maybe the market is going to evolve and it's going to grow over time. But as far as they're saying it, and again, viewed for the sort of EU lens, they were saying that it's actually a very small subset of the population of cabs that they're looking at. So that's a bit of the situation as it stands today.
Which is probably already a consequence or partially a consequence of the fact that this robust framework is being built and not all of them feel that they would be able to comply with this. So this relatively short, reduced number, low number of potential active cabs, it's also decided by the fact that they have this framework. So one thing is not independent from the other. And as you say, the market will evolve, but we will also see very significant differences around where they will be active, because even what happened with, as you said, the omnibus and etc. in the different countries, they will position themselves in different subsets of the market. This all without any, this does not impact the work that we are doing, nor the impact that we are doing will in any case override the jurisdictional freedom of making their own decisions. You are speaking about the UK, Mark. I don't know exactly which discussions you are having, but if the discussion is around accepting them or not accepting them, if you don't accept, the problem, well, is over. There is no problem. If you accept them, then you'll have to make a decision. The UK will have to make a decision about which framework is applicable. France decided to have a specific framework for non-professional accountants. Others may want to accept the framework that they are creating. So there is a lot of options which are for the jurisdictions to make, not for the IESBA. We are not making any options. We are not making any recommendations. We are not making any advice, nor being biased. Our only bias is for the interest, for the public interest, is to make sure that we delivered something which can be used in the same way, at the same level, everywhere, should the jurisdictions want. If they don't want, if they want to make other options, fine. That's not our responsibility or our call. right?
Yes, and what I would add as well is we were advised that it's not just a mandatory assurance engagements they're focused on. They very much have in mind that cabs may well be invited by the clients to perform or provide those engagements on a voluntary basis. So they very much have a focus on voluntary engagements in addition to mandatory engagements. And our discussions with them, they mentioned some jurisdictions where in fact cabs, I mean, India was one of those jurisdictions where apparently a conformity assessment body like the DNV is a very large player in that market, Indian market, and the cabs are performing in a huge number of sustainability assurance engagements, immediately under different standards. But India is one market where they did make it very clear to us that the cabs play a very significant role in that market. Korea is another one, but we know that already from past sort of updates on the research that IFAC has done, that there are a number of jurisdictions where cabs are very active and have a very significant market share. So that's a bit of the state of play at this point, I would say.
Okay, thank you very much, Ken, John, and Keith. I don't see anyone else. Janine, any comment from you from the PIOB? Anything?
No specific comments other than I think caution here is I think a wise thing. What I heard from IESBA members on what when you think about also doing a joint statement or so, but it's for later to decide. I think you really need to first see their paper, and what the gaps really are, because these overall topics, you can have varying issues behind these topics, and I think it's for a later board meeting to decide. Thank you.
Thank you, Janine, very well. So I don't see anyone else. Ken, do you want to close with any?
I suppose just to wrap up. So in terms of the way forward, Janine, I think you're absolutely right. So we have indicated that we will have a follow-up call with IEF. In fact, John is trying to set up a call for next week to just catch up with them. They were going to be going back to their own side to try to get some work done and then update us on forward direction. And we said we'll update them as well and report back a bit on our board discussion. And if the plan, based on their timeline, is to have this program developed by the end of June, July, then and if you're looking for some sort of a joint statement from our board, most likely we will need to bring something to this board for the June meeting. It's quite a tight window between now and June, or essentially between now and mid-May, because we'd have to finalize papers, etc., by around the mid-May timeframe. So we will need to see the updated mapping, and we will need to review their analysis, provide them with the relevant input, and then see what they come back with, and then basically present that to the board for discussion, and see what sort of feedback we will receive from the board, and see to what extent the board would be comfortable with any sort of statement of association or sort of collaboration or whatever it might be. All right, so around the June, I mean, we're probably thinking about coming back to the board in June with a further update on the work with IEF.
Thank you, Ken. And I think that with this, we can close the discussion and today's session a little bit ahead of time. So thank you very much for your very good contributions for these discussions. Wish you a very good rest until tomorrow at 9, when we will reconvene again to discuss farm culture and governance, the work being done or presented by the EIOC on private equity, technology, and IESBA communication. So we have a very diversified agenda for tomorrow. Have a good rest and see you tomorrow at 9.